Welcome to the State of the Markets podcast. I'm Paul Rodriguez of thinktrading.com.
I'm Tim Price of pricevaluepartners.com.
And our very special guest is Glen Goodman.
Have we actually started?
I don't know.
Yeah, we're live. We're broadcasting to an audience of
Just
millions already.
Like what? I open with the lamest anecdote in the world. I used to do a playground rhyme that had something to do with Shirley Temple, and I can't really remember many of the words. That's it, is it? That's my big entrance.
I'm going to cut it like that, so it just comes in with that, and me and Tim are just really confused about what you're doing.
Great.
But that doesn't take much, to be fair.
No, we'll start from here, Glen. So Glen Goodman, welcome back to the show.
It's great to be back.
It's absolutely fantastic to have you on.
Did you notice I put a little roll on the R there, like Tony the Tiger?
Actually, I didn't.
It's great to be on.
It's great. Yeah. Well, how many people listening know is Tony the Tiger still around? I don't know if he is.
It was Tony, wasn't it? It wasn't Terry.
No, it was Tony the Tiger. I'm pretty sure, unless it's one of those Mandela effect things, which are really weird.
I expect they dropped the tiger for, the same reason that Ronald McDonald was dropped, that you don't want to be seen to be making unhealthy things look fun.
Do you remember the advert, Pepper Army, It's a Bit of an Animal?
That was brilliant.
That was brilliant, but you couldn't have that now, could you? It just wouldn't work.
He was like, he had a proper mental illness, that slice of Pepper Army.
Yeah, that's right.
Well, they said it was a bit of an animal. They never said which bit of an animal it was. It's a bit off an animal.
It's bits of animals.
To think, really, given the shape of a pepper army.
But that's the thing. He wasn't an animal. He was a man or a sort of pepper army that was suffering from mental health issues that were very serious and deserved government intervention.
Yeah.
See, that's how we would look at it these days.
That's true. That's true. So for people
It
who
deserves our sympathy.
So people who have just tuned in, they're probably wondering
what on earth is going on.
What on earth is going on?
We actually, for anybody listening, we made a false start, which Paul said he was going to cut off, where we just rambled a load of rubbish, and now we've had our proper start, and we're just doing the exact same thing again.
Same thing. So I'll have to cut both in, and just so they know now, because they're going to be like, well, what was it?
Or both out. We could just start again.
I'll put it at the end, so if they want to jump to that. But now, Glen, for people who don't know who you are, perhaps we should start as to how you got into the financial markets in the first place. And you're famous for seeing the crash and taking advantage of it, but you more specifically then saw the value of crypto very, very early on, and you wrote a book about it. But tell us how you got into it, because it's a fascinating story.
Yeah, I mean, well, the great thing about me is that when crypto came along, I was already a really experienced investor, but I was still kind of young enough to keep my mind open very quickly to the possibility that there was a new asset class. And so I was able to transplant the skills that I'd learned trading traditional markets straight into the crypto market, which gave me actually a massive advantage over almost everybody else, because most other people who were in crypto, and I'm talking about 10 years ago, more than 10 years ago when I got into it, they were mostly technology people, or if they were vaguely into finance, they hadn't really done much other than trade a few shares. So really, I was trading against amateurs, and that's the best way to trade. If you can find yourself a bunch of amateurs who don't know what they're doing, to trade against them, that is perfect. So actually, the early days then trading Bitcoin it was just, money was being printed and handed to me. And it's got harder since then, because crypto markets are now more like traditional markets in the sense that they've got a lot more professional people operating within them. And even, of course, as we know now, exchange traded funds and, a lot of the big money is starting to get on board. So there are more sophisticated players. It's a little bit harder to make money. But actually, with Bitcoin itself, we're seeing, still fantastic trends going on, which can be taken advantage of. And I have been taking advantage of them. So there's still lots of money to be made. But to go back to your original question about how did I, going back even further, how did I get into this stuff in the first place? I was a TV reporter for the BBC and then for ITV News. I also presented some radio programs. I presented a trading show on LBC, would you believe, back in a bygone era of LBC.
Oh, brilliant.
Back when they would entertain the idea of having such a thing as a trading show every single day, for example.
Did you have lots of disclaimers on that every time you were talking about something? Or how did you approach that?
No, because it wasn't like, right, I'm trading this now. It was more a kind of fight. It was called Dawn Traders.
Oh,
it was,
God, I remember Dawn Traders. Blimey.
You?
Yes, I do. Yeah, I used to listen to it. Oh, shit, my phone.
Who was presenting it when you listened?
Oh, I can't remember, but I did used to listen to it. I remember it. I do remember it.
I was just a kid. I mean, it was ridiculous, really, that they would give me that program to say, okay, so I'd got into trading, but I was still very young and didn't know very much. But obviously, I got to interview lots of bigwigs of the financial scene. So like many journalists, they don't really know what they're doing, but they interview people who do know what they're doing, who do know about the subject. As long as you just ask open questions, then they give you sensible answers. So obviously, I learned a hell of a lot since then. As I say, I became a TV reporter. I was a business correspondent at ITV News. So again, interviewing a lot of big business people. But trading was something I was doing on the side. It was my hobby, and obviously it was to some degree encouraged by the fact that I had a job that was in a related field. But it wasn't necessarily specifically the reason why I was trading. I wasn't trading off any special information I was getting from my interviews or anything like that. I wasn't getting any kind of special inside information. But trading was just something I'd become addicted to, really, ever since I'd lost my savings in a tragic incident that I describe in the book during the dot-com crash, which is now, God, it's now 25 years ago, isn't it?
Yeah,
oh Lord, 25 years.
Kids and crashes date things, don't they?
Yeah, I was a crazy kid in a crazy crash. And, I did that thing of doubling up on my losses and then, buying more, putting more on. What is it? The moron rule, they call it. Keep putting more on.
Yeah.
So I kept adding and adding to this losing position, which was, I think, the first shares I'd ever bought in my life. And it was on the encouragement of a friend of mine who was working for this company, who were like kind of real whiz kid online gaming startup operation that had so much capital infused into them during the dot-com boom that they had become a very big company in London very quickly, with huge offices, multi-story in the centre of London. I went to visit those offices. It was so cool. There was like ping pong. There were people roller skating. There was
no one's doing any work.
No, very little work was being done, as it turned out, because the company eventually, pretty much went out of business, or rather was bought for an extremely small amount of money. So that I basically lost my entire investment. And whereas all my friends then gave up on trade, because we'd all gone in on it together, you see, and they'd all given up, this trading thing's pointless. I was determined, this isn't going to beat me. I will learn. And so I started reading all the classic books and, just developing my skills slowly, as I say, as a hobby over many years. And then in the 2007 Northern Rock incident, that was when things really changed for me, because I couldn't understand how, with the subprime mortgage problems that were going on in the United States and Northern Rock collapsing in the UK and massive queue, it was a huge news story, massive queues around the blocks of every single branch, a proper bank run, in the old-fashioned sense. And I thought, wow, this stuff's getting really bad. There's got to be a market crash. But there wasn't a market crash. That's the thing that...
Not yet.
No, exactly. A lot of people forget that. We go, 2008, the subprime mortgage problems, the Lehman collapse, everybody, and the market crash. It wasn't like that. What actually happened was we had the subprime problems in 2007, and we had Northern Rock and various other sort of canaries in the coal mine, and then the market just carried on going up. And this is why, actually, if you watch the film The Big Short, you may remember that the short bets that the various people, the heroes of the film, put on almost bankrupt the companies that they work for in a few cases, I think, because the market kept going up and they kept losing more and more money. And it's sort of they only just managed to hold on long enough for the market to turn so that they then become the heroes of the story. Had the boom carried on just a tiny bit longer, then we would not know even who those people are, because they would have lost their bet, they would have lost their job, and they would just disappear into obscurity. But as it happened, what I did was something different, because I'd already learned some lessons over the several years that I'd been trading. And one of those main lessons I'd learned from gameplay was you don't buy something that's going the wrong way and then hold it while it's going the wrong way. So what I wanted to do was short the market, obviously, because I thought the market was going to crash. It had to crash from everything I was hearing about the economy, and yet it kept going up. And so I knew you don't sell short something that is going up. Likewise, you don't buy something that's going down. That was the lesson that I'd learned. I know not everybody agrees with that, but it served me pretty well over the years as a maxim. And so what happened was, eventually the market started turning. This is still before Lehman Brothers crash in 2008. It started just, it made a long top over a period of months. And so I was starting to get a bit more confident. And eventually I saw a good place to open my shorts, and I started shorting banking shares like crazy. And then basically the Lehman Brothers collapse happened, which accelerated the decline of the market. And I started making really good money. And then some years later, I wrote an article about it for the Times. They asked me to do a sort of full page feature with a picture of me next to Brad Pitt out of the Big Short, and juxtaposing us. And I called the article was The Little Short, and it was how I'd turned £3,000. Because that's all I had on the line, £3,000. I didn't have a lot. I didn't have much spare money in those days. £3,000 into £100,000, obviously using leverage to some degree.
Well, I was going to say, what contracts did you actually trade?
It was, as I say, I was shorting
Were you leverage short banks and the indices? Okay.
Indices too. But various bank shares, including, I remember, Bradford and Bingley was one of them.
Oh, God.
And what was interesting about this, you may remember from 2008, that the authorities decided that it was the shorters who were responsible for everything that was going wrong. Like they always do. It's funny,
typical
isn't
response. Exactly the same in the late 90s when currencies were collapsing against the dollar.
Yep. It's always the evil
bloody
short,
speculators.
Evil shorts.
Yeah.
Because they're basically saying the I think it was the Bank of England was saying, you shorters, because you're shorting banking shares, you're making them illiquid, whereas they are not really insolvent.
Not true. That's completely counterintuitively true. That, as far as I'm aware, that if you're shorting, so if you're adding to liquidity, not
because you have to buy back as well.
From it.
Yeah. It is absolute nonsense. You're absolutely
exactly. Right. They were saying that we were causing all the problems. And so they banned shorting of bank shares. But luckily for me, they didn't ban existing shorts. They didn't force me to close my existing shorts. So I was able to carry on profiting, even though nobody was able to open new shorts. And by the way, if you look, as I have done in the past, back at that chart of any of the indices and see what happened when they banned shorts. What difference did it make to the trajectory of the market? Zero. It made no difference. Why? Because those banks were insolvent. If something's insolvent, it doesn't matter what the share price is, does it? It's insolvent.
But it's also because as soon as you tell the market you're scared and you need to protect it by doing something like that, you cause a bigger problem by other things get sold by proxy, and it forces the market down, because it's like, well, if you know, for example, that the market is 10 points away from going limit short, you're going to sell because you're kind of forced to sell, because if you don't, it's going to be, I know you don't have limits in the FTSE, but that's how it works in the commodity market. So they almost get drawn to the limits when they get close. But admitting that the market is so weak that you need regulation to protect it in that way. And also, all traders, anyone with a brain could see through that it wasn't the short sellers who were doing it. It was the fact that it might have had something to do with the lending policies over the last few years. You know, that might have had something small to do with why the banking shares were going down and why everything was going down.
No, the bankers were well behaved.
Yeah.
And the credit ratings agencies and the central banks, they all had integrity. Whereas nasty people like me, who think it's okay to be the opposite of a fanboy, to be a downer, to be a knocker
of these AAA rated bonds. AAA rated bonds. How could you sell them? How could you say that they're going down? Oh, it was just a mad time, wasn't it? It was completely mad.
It was.
And I totally agree with you about the 2007 aspect of it, because I always call it the crash of 2007 because that's where it all started. It all started to happen, and I always think of it as 2007. Also, looking at it,
the great thing about it, I mean, I don't know what you two were actually doing trading wise at the time, but for me as a sort of, a young guy who was still getting my head around the markets. I just found it astonishing and I thought because I was relatively inexperienced that I must be missing something, because if the market's going up and most of the people in the markets were far older and more experienced than I was, then surely they knew better than I did about whether it was a good idea to buy shares or not. But I just found it astonishing that the market was not doing what it obviously should do. So we had so much notice. We had almost a year's notice in total to get our ducks in a row and to start shorting.
Yeah. I was working for an investment bank, and they called me Dr. Doom because I was saying this is all going to go down, and I would be on we'd have like in the dealing room they had a PA system that would go out to everybody, and you'd say what's the morning report, and I'd say this is going on and this is going on, and the market's going to crash. And they'd be like, yeah, here goes Dr. Doom. Here he is, Dr. Doom. And it's like...
Were you the hero of the place?
No. Well...
I mean, after it crashed.
No, because nobody likes... No, because then it's all like... Because then once the whole system imploded and banks were going down, and it was like all bonuses were going to be, cut and all that sort of stuff. It just turns to that. So no, not really. No, it was a bit frustrating. I was in the media, so I was doing Bloomberg, and then they shut that down. So I couldn't. So I was trying to get I was trying to say that the market's going to crash, at least as a call. But then all media got shut down, so I couldn't say that either. And then it was like, you just sit and watch the shares implode, and you think, great, what does one do? But yeah,
it's kind of depressing that you couldn't. I don't know. It's always the way with people who sort of warn about things, isn't it? Is that they don't tend to after it sort of get any kind of reward for all their pain and misery that they go through while they're warning people that don't want to be warned.
Yeah, exactly. I mean, it is interesting. It was just I could see it as a very interesting part, an interesting exercise in how sort of very intelligent people are just kind of blind to what is really going on in the markets. It's as soon as the interest rates started to blow out, short-term interest rates, which is the lending rate between the banks, short sterling was saying that there was stress in the system. That was one of the first signs. The Bank of England was saying that they were going to raise interest rates because oil was too high and inflation was too high. Oil went to $147, if you remember. And that was like, so there was so much pain being taken by the man on the street, as it were, because oil prices were high. The Bank of England was saying that they were going to raise interest rates. Interest rates were blowing out in the short-term interest rate futures were saying that banks didn't trust each other. The currency markets were going into meltdown. Credit default swaps for certain countries, like, for example, Swedish and the Scandinavian countries was starting to blow out. And for people who don't know what credit default swaps are, they are effectively the insurance for bonds for governments, which you can kind of bet against if you want. And so what it meant was the cost of the insurance was going up and up and up. And it was going up to levels where it was saying that the governments were bankrupt. But nobody would listen to the fact that these contracts were showing that the governments could not pay their debt. And they couldn't pay their debts because the banks were so big, the bank debts were so big that they would swallow the government's ability to cover those debts, or at least on the international stage, you'd be selling their bonds. So there were so many distress signs that were being shown in the markets before and in the run up to the big breakdown. But as you say, it was so interesting how, despite all of that, there were packages being put together, and they tried to fight it, and that's what pushed the market up a bit. Because there was optimism about, they've got this package, it'll sort it out. But it reminded me very much of 1992 when sterling came out of the ERM, and Norman Lamont said, we've borrowed whatever it was, 10 billion from the IMF, not realizing that the daily turnover in foreign exchange is $1 trillion. Oh, it was then. It's much more than that now. And $10 billion from the IMF was never going to protect sterling. It was just like a joke. And so you could see what the governments were doing to try and protect the system once it started to go. But it was just like a drop in the bucket. It was never going to work. So it was interesting. And then, then it was like full on, at various stages, it was like, are you going to be able to take money out of the cash machine? And it goes from the actual day-to-day risk to, seriously, how is the system going to work? Is it really going to implode?
Yeah, there was one, you just referred there actually briefly to the price of oil skyrocketing at the time. And that's reminded me that one of the best trades that I did during that period that added to the gains that I made in that 3,000 to 100,000 pound run was oil, but I wasn't going long oil. What happened was, as a business correspondent, I had a meeting with the person who was, I won't name them, but the person who was at the time the head of ITV News. And they were getting really interested in business because suddenly it was all, things were happening, and they'd wanted to understand, and they'd heard about the price of oil rocketing. So they got me into the office and they went, right, can we do a TV report? Do you think you can do something about how ordinary people can buy oil and invest in oil? Because
perfect.
It's now like $150, but it's going up and up. So it's like they can make so much profit.
What a great signal.
People.
And you recognized it at that point, that was a great country signal?
Yes. So I started
brilliant.
shorting. I didn't, again, I waited until it actually turned around, until I saw my first red candle on the chart. And then as soon as I saw it, I was right. Because that was such a contrary signal. Whenever someone as mainstream as a boss like that starts talking about such things, then, it's the same with Bitcoin. I say in my book, actually, that it was when my mother-in-law, who was in her 80s, phoned me up to ask how she could buy Bitcoin. And she phoned me up because she has never used a smartphone, so she can't even, message or anything like that. Or email. She's got no email address. So it's, this is the kind of person that we're talking about technology-wise, and she wanted to buy Bitcoin. So again, a massive contrary signal. That was at the top in 2017 that she called me. So that was one of the signals, one of the things I was looking out for. So yeah, as I say, likewise, back in 2008, my boss at ITV News, or the big boss at ITV News, wanted to tell people how they could invest in oil. And so obviously I was ready to started shorting shortly after. The price of oil, I'm looking at it now, it went from about $150 a barrel in July 2008. In less than 6 months, it was down at $35 a barrel. How about that?
Yeah. Tim, what was
By the way, that just as a coder, that boss is now, I won't say who they are, but they are extremely high up at the BBC, like one of the top people.
Oh, wow. Yeah, I mean, and it's fair to say that it wasn't his fault that he was reporting on it. It's just a classic, the way the news flow works is that the media is most interested at the wrong time after the trend has happened. And that's why it becomes a contrary signal, which is, so it might not make sense to people but for people who've watched the markets for a long time, you do see these points where, once it's gone up, you see things develop from a trend and they go faster and faster and faster. And then all of a sudden you get all this interest that just comes late to the party. And very rarely would it ever, continue after that. It's usually either at the top or very close to the top, which is why I sometimes ask people if they've, like I was going to ask you a bit later on about whether anyone has contacted you about investing in Bitcoin in the same way or anything else. But just before we do that.
The answer is no.
Oh, okay.
There's no contrarian indicators in that sense, not at the moment. Interest is still relatively subdued.
Yeah, that's exactly what I'd expect because it's sort of high, but people are scared to buy it, which means we're probably not at the top. Tim, what was your recollection of the crisis? What was going on for you?
I seem to recall that there were problems in the money markets in 2007. And was it Bear Stearns was actually one of the first investment banks to go, and it got swept up into, was it JP Morgan? But there were signs that things were starting to fray. But they didn't. It took about a year for them to become the fully fledged crisis of 08 and Lehman Brothers. So I think Bear Stearns preempted the death of Lehman by about 12 months, if I recall.
I'm just looking it up. It was, there were problems obviously at the beginning of 2008, and then it went down for good on March the 16th. So that's about 6 months.
But Northern Rock was the year beforehand.
Yeah, Northern Rock was the summer before, I think.
And I remember I was on holiday in Italy, possibly Rome, and I was following sort of developments on the TV, in as much as you can do that from like a hotel room in a foreign hotel. And I as soon as we got home, I wanted to go to. We made a little pilgrimage to Golders Green because that was the closest branch of Northern Rock I could find. And there was a run on that bank there, and it was a remarkably British thing because you had people on like pensioners on like picnic chairs and things, and then I had sandwiches, and it was like a sort of family outing, like it's a Sunday outing, and it was a run on the bank, but you couldn't have had a more British run if you tried. So everyone was like chatting and. It wasn't exactly out of 1929 or,
I included a photo of that exact branch in my book.
In your book, yeah.
Because there was something about the Golders Green branch. I think it had the longest queue in the country or something. So
did it really?
Cameras headed there, yeah.
Oh, wow. Yeah, no, I saw it in your book. Yeah, and it's in the updated version that we're gonna talk about.
Yes.
Yes. But that's amazing.
And just to finish the anecdote. From my perspective, I naively thought, well, I'll never see a bank run again. Little did I know what fate was going to have in store for the entire world financial system over the subsequent decades. But at the time it was just an isolated problem. Of course, it's now become a completely global problem, and I think the problem's infinitely worse and unfixable now. And it's very sad to see what's happened in relation to the breakdown between Elon and Trump, because I had possibly naively somewhat high hopes that Doge was actually going to do a job, and it's just collapsed in acrimony and fireworks and all the rest. And it shows that basically the blob will win out over just about anything. The deep state will win out over just about anything.
I think it's surprising. It's so surprising, isn't it? That how vocal and how embarrassing that has been. It's just awful, absolutely awful.
It's beyond parody.
I was going to say, Tim, when I first met you, which must be about a decade ago or so, I thought you were. I liked you. I liked you immediately.
Ooh,
Let me get that.
what
in
are you
there
about
before
to
I
say?
But. I'm going to say, but
Oh, there's a
no,
but.
I thought Tim's views on the economy were somewhat eccentric, right? And I'd already read Rickard's by that point, so I didn't think Tim's views were just like completely crazy or anything. I already understood the argument, but I still felt like it was very much a kind of edge case, edge scenario, should we say? The things he was talking about, and that Rickard's was also talking about. Jim Rickard's, what book was that I read? Currency Wars, I think. I still felt, yeah, this is interesting, but it ain't gonna happen. That's how I felt back then. And now, here we are a decade on, and, Tim, you seem to me now like the most common sense, non-eccentric person in any room.
I'm trying to think. I'm trying to think. He gave the phrase, but it's something like the future's already here, but it's not equally distributed yet.
Oh,
Yeah.
wow. Oh, that's
true.
brilliant. Yeah.
Well, you were in there early with understanding what was happening, and all credit to you for that. And I agree with you totally about what you were saying about Musk. I had high hopes for him as well, because he just talked with such confidence at the beginning about knocking off, well, first of all, 2 trillion off the budget. Then he took it down to 1 trillion once Trump
And
had
then
said,
like
"Oh, no, we can't cut,
maybe a few hundred
can't cut
billion,
any
and
of
then
this
it's
stuff."
like maybe tuppence halfpenny, and in the end, and then it just fizzles out altogether.
It's like if Musk can't do it, is there anyone in the world who can? I suspect not. And frankly, I have lost. I've lost any kind of. I'm not going to say all
Sympathy,
hope, but
sympathy for.
well, it's just I was just really hoping that somebody could break through and stop the debt rising.
It's a
rising
much
before it was
broader
too
level.
late.
I think what's also, I mean, and this is going to take us into the realms of what people would describe as conspiracy theory, but I think at a much broader level, not just economically and financially, but in culturally and in so many other respects, I think what this represents is actually the idea that people love the idea of a savior, of someone who can charge in on a white horse and save everybody. But the reality is, if anybody's going to save anybody, we are the people we've been waiting for. Nobody is going to save us from whatever's going to happen. We have to do it ourselves.
Yeah.
I don't think we're going to do it ourselves.
Maybe the situation is insoluble and unsalvageable. But
Shall I tell you why I
nevertheless, the
think
point I'm making is that the idea that someone else can do it is I think now tragically naive.
Well,
I
to
think
steal one of
nobody's
your
gonna do it.
comments, Tim, you've always said this before Trump and Musk and all this other stuff was, no matter who you vote for, you always get government. And I think, I always think that. And I've always, to a certain extent, hated
But
politics.
I think a lot of people now are waking up to the malign power of the uniparty. So you've had this ostensible choice in, say, British politics for years, but the reality is there's no functional distinction between Labour and the Conservatives in terms of the damage they've done over the last decade or so. And it's just like, meeting a new boss, same as the old boss.
I mean, I absolutely agree with that, but I would go even further with the pessimism, if I may.
Go on.
Well, I don't think it's pessimism.
I think-
It's an honest acknowledgement of the problems facing the world. It's called realism or pragmatism.
Yes, and my realism goes even further because, frankly, the reason I see no hope at the moment is because I feel like it's not just the politicians, and I don't think conspiracies even need to come into it. I think the truth is right out there in the open, and the truth is that the current generations of people of all ages are absolutely 100% unwilling to make the necessary sacrifices in order to get our house back in order. And I'll give you some examples there's a million examples in America, but just for this country, for Britain, for example, look at the fuss over winter fuel payments for pensioners who aren't poor, right? We're talking about a few £100 a year being taken off the people who can afford to live without the winter fuel payments. And Labour said it came up on every doorstep during the council elections. You know, it was like a big thing. And of course, they folded. So even on that tiny little attempt to save money, they failed. And don't even get me started on Theresa May's attempt to get pensioners with huge home equity to use some of it to pay for their home care needs. You remember she attempted to do that some years ago and immediately had to do an about turn because people wouldn't stand for it. So I'm not going to put all the blame on pensioners. I'm saying it's people of all ages. I think at this point in time have become so used to the entitlements that they have that you'd have to claw them out of their cold dead hands.
But notwithstanding that, the boomers ate all the pies, and everyone else is now going to have to pay the price of that.
Yes. I'm afraid they did. It's certainly in terms of housing. I think housing is a problem that, it's sort of all linked in with what we're talking about, but it's also, in a way, its own separate problem that could be solved with really massive planning regulation changes, and not just in Britain, but in most of the major population centres of the West, like New York and Sydney in particular is a bad one, and some of the major cities in Canada as well. They all have the same problems where NIMBYism is preventing building, and you end up with a situation where some of the young people who follow me and message me and so on about trading tell me, people in their 20s, they tell me that their whole generation, everybody they know, is just utterly sort of without hope of ever owning their own home. And I saw some figures the other day that showed that the average age to buy a home, their first home now in Canada, is 39, I believe, which seems almost impossible to believe, but that was the number.
So, when it comes to your actual trading and how you're kind of managing your positions,
yes.
A lot of people, obviously, you're living the dream, basically. So you're living the dream of being, self-sufficient, being able to look at the markets and make your money from it. Even if you were to start with that 100,000, well, you did start with that 100,000, you turned it 3 into 100. How do you manage to actually live off the capital when you make like profits on a trade, for example? You can't immediately take that out and go, oh, I've got to live off it. Or the stress of having to do that for most people would be too much. If you can't pay the rent next month, or your family can't go on holiday because, you've had a bad trading month or whatever, it psychologically could really affect you. And if you're, if you look at the numbers of what good traders will make, 10%, 15% a year is pretty much, if you do that consistently, you're going to make a lot of money over the long term, but you can't withdraw that money. You've got to compound it. So I'm just curious how you've managed to basically live the dream.
Discipline is the answer there, because as you say, I didn't grow up with some huge trust fund or anything like that, unfortunately. So what I did after I'd made that 100,000 or so, I carried on trading successfully while still being a TV reporter for several years after that. And so I was able to build up a capital cushion, because my salary, whilst not particularly big, as any TV reporter will tell you, despite the fact that everybody assumes they're rich because they have expensive suits and all the rest of it. Apart from Robert Peston and a few others, they earn, pretty modest amounts of money. But it was enough to live on, right? So then I could save all the money that I was earning from trading and build up this cushion of hundreds of thousands of pounds by the time I was basically ready to semi-retire, I was still in my 30s, in my mid-30s at the time, and I just thought, I've had enough of getting up early every day, and I'm earning more from my trading than I am from my job, and I've built up enough capital now that I'm going to give it a go. But even so, as you quite rightly pointed out, I still only had in the hundreds of thousands, which means that if I'm trading in a conservative way, which I was and still am because I have a family to support, I had a very young family at the time I gave up my job. So I had to trade in a very sensible way, which, with the help of Nassim Taleb's books like The Black Swan, I'd learnt about avoiding risk of ruin.
The
And
barbell
that was
strategy.
absolutely key in me still being a trader today, obviously. Had his rules about risk of ruin not been written, though obviously he didn't invent them, but he was drawing off academic literature from decades earlier, but it was all a bit obscure at that time, and he sort of put a big bright light on the idea of tail risk and the idea that you just have one unlucky thing happen to you and your entire account can be wiped out if you're not very careful. So I learned how to be careful enough that that doesn't happen, and those rules and position management sort of ideas are all in my book, of course. And yeah, it's allowed me to just carry on, support my family, go on holidays and all the rest of it, and not have to get up early. And yeah, some people would call that living the dream, but yeah, it involves a lot of discipline in order to stay within the right risk boundaries and not do stupid things. I can't afford to just like go on tilt and make some huge trade that goes wrong and I lose tons of money. That kind of thing is just not what I can do if I want to carry on doing what I'm doing. So that's the dream I'm selling. Is kind of like a small businessman's dream, if you see what I mean.
But being at home, I bet you had to fight off being drawn into so many things like, could you just help with the shopping? Could you pick the kids up from school? Could you just do this? Because, you're at home, right? And I think a lot of people during lockdown probably got to see a lot of that, like couples being together at home. I know from myself, from working from home, how you can get drawn into stuff very, very easily, and it's very disruptive. And the word that you've used, discipline, is absolutely bang on, because you really do need that in order to structure your day, because otherwise, who else is going to structure it?
Yes, exactly. I mean, I was helped to some degree by the fact that my wife didn't have a job and still doesn't have a job by choice. That's what she chose. And if I was another kind of man in another kind of situation, I might have been going, "God, come on, the kids are old enough now. Go get out there, earn a crust, earn us a bit of extra dosh." But it kind of suited me that she was comfortable in that scenario, because then I didn't get called on so much to do the kinds of things you were talking about.
And have you tried to talk to her or your kids or about the markets and trading and that sort of stuff?
To a degree, though nowhere near as much as I should. But here's the thing, is that my son has been forced by his school. He's at that age where they're forced to do work experience. And he wanted to do a work experience with me. So that's coming up shortly.
Great.
He's gonna get a rude awakening about the pain and the suffering that I go through every day.
But you were still also, weren't you freelance in the media as well, or perhaps you still are? Do you still do that?
No, not really. I mean, I do.
You were doing videos though, weren't you? At one point, I seem to remember.
I've dipped my hand or toe into so many different things over the years. Just whenever people sort of would phone me up and go, "Oh, do you fancy coming on this?" or doing a little bit of that. Basically, after I left ITV News, I carried on freelance reporting for them, just because I couldn't bear to I'm quite a sociable person, and just sitting in the house on my own all the time, I missed everybody. So I went back like 1 day a week, just 1 day a week on average, was enough to kind of make me feel like I still had some connection with human beings.
Completely
I was
understand
still
it.
in the real world. And actually, I started making trading videos in about 2016, 2017, partly because the bits and bobs that I was doing, I'd sort of lost interest in them altogether. I decided to sort of make a clean break with broadcasting eventually. I just let the kind of 1 day a week peter out. I kept making excuses for why I couldn't do this shift and that shift and all that. And it just got to the point where I just thought, sod it. And then that gave me the impetus to really move in another direction, which was sort of expressing myself by making trading videos. And so I started doing that on Facebook and built up this Facebook page with about 250,000 followers in 2017, which was at the time a hell of a lot of followers, because it was a kind of a new thing having these big followings at the time. So people, it was the biggest trading page in the world at the time. And they all wanted me to make, a lot of the followers wanted me to make videos about Bitcoin, which I'd already been trading for a couple of years, but I didn't realize was about to explode in the way that it was. So there I was starting to make trading videos. Everybody seemed to be enjoying them. And then on my page at the peak in 2017, I did this like public warning, that which you could still see on there today. The post is still up, saying basically, warning, there's flashing warning signals going off in my mind and on the price chart. I think we've probably reached the top. It's possible it could go higher, but I think the nice smooth journey we've had is now over. I said, and that did basically mark the top. So that was probably the main reason why the publishers came calling to ask me to sign a publishing deal to write a book, rather than any of the other crypto chancers who were around. At least I had something to kind of prove that my bona fides.
I see. Because I was going to ask how you got into actually writing the book. So they phoned you up and said, right, we want you to document why you're so good at this, and then from there the first version of your book was released.
Yeah, they wanted me to talk about, how the crypto world works, all the basics of what it's all about and everything you can tell I'm quite a colloquial kind of guy. I don't talk in a very formal way. And actually, when I was a TV reporter in business, I always specialized in making complicated things relatively simple to explain. So I had years and years of experience in simplifying things for the layman.
That means you understand it, really.
Yeah, I'd like to think so. Yeah, and the book is kind of aimed at laymen, really. It's for novices primarily, though. Like with many of these trading books, as you get further and further into it, it starts, I can start to weave in some of the complexities, particularly when I get to the stuff about actual trading and what that's all about and all the different strategies I use, trend following strategies, classical charting, are indicators useful? And if so, which ones? And then talking about fundamentals of cryptocurrencies, such as they are,
Yeah.
Fundamentals in cryptocurrency means something quite different to fundamentals in stocks and shares, because obviously you don't have revenues and profits for the vast bulk of these things. And then I talk about, position sizing, money management, and psychology as well. So, I've squeezed everything in there, and I sort of talk in quite a quick and concise and relatively simple way. So I hope, well, lots of people have told me from the first edition, loads of people have told me that, that they were very happy with the way it was all presented and with a bit of humor and everything. But for the second edition, I just wanted to really to build on what I'd done in the first by updating, because so much has changed since 2019 when the first edition came out. The whole crypto world has been transformed technology-wise. So many apps and platforms of the things I mentioned in the first version had changed, so I had to sort of basically, there's hardly a page where I didn't make at least one change on it, and certainly I had to add dozens of new pages to it as well. So there's a lot of new stuff in the new version, but yeah, the main thing I wanted to keep was the thing that people said they most appreciated about the best emails I got in recent years were in the aftermath of the 2022 crypto crash, where as usual, most cryptos fell 90, 95%, or even 100%, just disappeared altogether. Even Bitcoin, fell around about 80%, and that was one of the best survivors of the lot. And what people were saying to me was, thank you so much for teaching me to sell at the end of bull markets. That's the main message of my book. And the people that followed it were so pleased because they'd saved themselves 80, 90, 95% losses. And that's the key thing. It's not so much I want to help people make money, but even more than that, the most important thing is I want to stop them losing money. I want the ordinary people to not lose their savings because they're encouraged to do so by a load of idiots on the internet who constantly ramp up Bitcoin and talk it up the whole time.
Yeah.
Actually, let me give you an example quickly.
Yeah, cool.
Because it's just happened. Actually, you can see it in, I think, my latest tweet or one of my latest tweets. But, Michael Saylor, do you remember I mentioned him a year ago, last time we spoke? I said that I couldn't stand his face. And so I couldn't bear to listen to him or anything he says because his face annoys me so much. Well, nothing has changed in that regard. And he did an interview a couple of days ago with Bloomberg, where he basically says Bitcoin, or he said, winter is not coming back, were his exact words. Basically, Bitcoin bear markets are over now, and the price is just going to go straight to $1 million, pretty much, is what he says. And so what I did was I did a little tweet where I juxtaposed him with a couple of people who you might remember. Irving Fisher, who was at the time one of the top economists in the world in 1929, who famously said before the Wall Street crash, a few months before the Wall Street crash, prices have reached a permanently high plateau, he said. And also I decided to include Gordon Brown.
Yes.
Our very own Prime Minister.
End of boom and bust.
2006, he said, was the latest date that I could find, because he'd been saying we've abolished boom and bust since the year 2000. The latest date I can find him saying it is 2006. And then, of course, bust. So, yeah, that's why I wanted to mention Michael Saylor, because, again, here we are. It's the just talking up the market and trying to pretend that there's absolutely no possibility of it falling.
Tim, I thought you might have something to say about Gordon Brown and his views.
Not on a family show, Paul.
given that he sold the UK's gold in 2000.
Yeah, no, I want to keep it as clean as possible.
Yeah, that's right. We don't want you to
children listening.
We don't want you to rage quit, as they say. So, with regard to, that's one sign that Bitcoin is maybe nearing a top. We can all look at the biases of whomever is speaking. So, of course, Michael Saylor, he's long up the wazoo, to put it without MicroStrategy. Just look at the chart. It's starting to underperform a little bit. It has gone back up. It did correct quite heavily, and it's gone back up. But what else is he going to say? He's the biggest bull in the room of people who are bullish on Bitcoin. So.
He could say whatever he wants, but why do people take him seriously?
Well, exactly. I mean, only because I suppose he's been proven to be right up to this point. And I guess that is exactly what you're trying to get people to understand, that, just because he's been right up to this point, it doesn't mean he's going to continue to be right, because you can look at any boom in anything, and somebody who was predicting that the .com stocks would go through the roof might have been correct, but that doesn't mean that they are going to continue to go through the roof ad infinitum. And it's particularly dangerous when somebody's saying that it's never going to go down, because anyone who understands anything about risk knows that that's possible about any financial asset. And I suppose that does go back to Taleb, but it's also just basic common sense. Any market can fall. So, but there isn't.
Sorry to interrupt. I was just going to say, the way I try to explain it to people in the book, and I go to quite great lengths actually in the second edition. I expanded the section where I'm trying to explain to people why it matters if you have these massive corrections or massive crashes, because they say to me, well, if you're just buying and holding, and it is going to go to 1 million, then what's the problem? Well, two answers to that. Number one, you don't know it's going to 1 million. Okay, there's a damn good chance that things like gold and Bitcoin are going to continue sort of rocketing. I think that the chance is higher than it's ever been because of all the stuff that we referred to earlier on, the degrading of the financial system and everything sort of slowly falling apart. It sort of stands to reason that people would probably flock increasingly to safe havens, as they are currently, gold, Bitcoin, things like that. But there are several reasons why Bitcoin might not go to 1 million. Number one, Bitcoin has been highly correlated with tech stocks for several years now. I actually mentioned that on the podcast last year, that there was this correlation that had just seemed, it was still in its early months at the time, but I was already quite convinced that it was going to become a semi-permanent fixture. And here we are a year later, and the correlation has continued to be pretty strong. So if the stock market were to crash, as I think all three of us probably expect it to do within the next, year, two at most. Is that fair to say? I mean, we can't be sure, but with the way the American economy is going, it seems pretty likely. Do you two agree with that or not?
I wouldn't find that remotely surprising.
Yeah, yeah. I mean, it seems like we're at the end of something. That's for sure.
All right. So if the stock market were to crash, and we've got this strong correlation with Bitcoin, we can't necessarily rely on it to do what gold is doing and just continue to go up and up. It might get dragged down because so many, particularly sophisticated, so-called sophisticated investors, see Bitcoin as just another tech stock. And so that's why it goes up and down with tech stocks now.
But I feel obligated, sorry to cut in,
Sure.
Glenn, but I feel obligated to give credit to, I think, was it David Hunter, Paul, we had on, who made the point that when the market next really has a conniption fit, the amount of QE you'll see will be so extraordinary, it'll drive everything to the moon.
Well, he's expecting that to happen before the crash, though, isn't he? That's his...
No, I think if I remember what he said, his argument was that there will be a shakeout in the market. The authorities will then respond to that by so much money printing. I think the figure he quoted was, in his opinion, something of the order of $21 trillion.
Yeah.
And if that's put into the market, then it'll lift a lot of ships.
So he's kind of looking 2 steps ahead. So he's looking melt up, huge crash, which is basically what you're warning about here. About Bitcoin will not just be, it won't just glide effortlessly on whilst everything's crashing, and then potentially once the market is settled to a point, in order to turn it around, they are going to turn the spigots like we've never seen before. That's his view. So you've got kind of
but I know that he also said. I mean, well, first of all, David, and like you two, I've been listening to him for donkey's years now because he's so interesting. It's just such a unique thesis. He repeats the same thing over and over again for years and years, and it's like, but it's like when he started doing it, it's a bit like Tim. When he started doing it, it kind of felt quite eccentric, and now it just feels like real life. He's describing real life. See what I mean? And so I started taking him pretty seriously about 3 or 4 years ago, and I've been listening to him closely ever since. If I'm not mistaken, what he predicts is that everything obviously goes into this melt up that I guess he expects to be sort of concluding this year, sometime later in the year.
He has said potentially this year, but he's also said not to hold him on timing, because he said you just can't absolutely time it. But he said it was possible. He
has been, this is my one criticism, or the one criticism everyone has of David Hunter really, is that he just keeps stretching out the time frame over and over again. Well, that's how it feels anyway. But to be fair to him, if you look at the actual words that he writes and says, he never is tied down to a particular time frame. But he does kind of, year after year, he has kind of hinted it's happening soon, but then soon never quite comes. But, that's fair enough. The dynamics that he's describing are very real. It's very difficult to work out when the actual sort of, when the rush happens, when the snowball finally starts rolling down the hill. Is fair enough, and we don't need to time down to timing. But anyway, let's say he's saying that everything peaks sort of later this year, but then he's calling an 80% crash in stocks. If I'm correct in thinking this, even when the money printing starts and becomes ridiculous, he doesn't expect stocks to get back to he expects them to rise, but he doesn't expect them to get back to that level that they reach in this current melt up, because he keeps saying that the peak in this current melt up will stand for decades, he says.
I'd have to go back and re-listen to what he said about that. I thought what he was saying was it would cause huge inflation. So ultimately, maybe stocks would go into a new high, but not inflation adjusted. And gold,
you could be right. You could be right there.
And gold goes to something like 20,000, something of that magnitude. So it maybe gets sold off during the crisis and then settles and then just takes off like a rocket. And there's a huge inflationary kind of boom. So that was my understanding. So
that's a good point. I'll have to go back and listen as well because you're quite right. Maybe he's talking about the inflation adjusted prices of shares rather than the absolute values.
But we should get him back on soon anyway. But yeah, I seem to think his big call is that inflation is coming via that route, via the central banks just basically just throwing everything at it. And therefore almost sort of losing control the other way and sending commodity prices to levels that we just unimaginable right now, but will make sense because of what they're doing.
Yeah, I think he's definitely saying commodity prices are going to rocket. Well, they go into this melt up now, then they collapse along with everything else, and then they rocket, possibly even higher than they were before.
Oh, much higher.
The only thing I was talking about was stocks, that I'm not 100% sure that he said stocks will go higher than they do in this current melt up. But yeah, he definitely said commodities he's expecting to do because of the massive money printing. So we could expect maybe Bitcoin to go along with that, or would Bitcoin be doing more what stocks are doing rather than what gold is doing? That's one of the risk factors for against the it goes to a million thesis. But what I wanted to refer to, the thing that I'd gone to great lengths in my book to explain to people, is that if you're an ordinary person and you hold something and you believe in it and you're really hoping that you're going to make tons of money out of it, and then it crashes by 80%, right? That is such a problem for you from an emotional point of view. Not for every single person. I have come across a handful of people who are able to take that kind of decline in their stride, even when they've got a big proportion of their household wealth invested in Bitcoin. I've known people during the bear markets to continue holding, and the way they do is compartmentalize it in their mind. So they pretend that they don't even have it. They just put it to one side and go, well, I'm hoping that will be something, but I'm not even going to think about it anymore. I'm just going to leave it there and just forget about it. And if it comes good, then wonderful. But if it doesn't, then never mind. And it's great that they're able to compartmentalize in that way, because most people can't. And so what I try to explain to people in the book, based on hundreds of sob stories that readers and traders generally have sent me over the years, and I've tried to counsel them, when you're in that rut, in the depths of despair because you've lost so much of your investment value, and then other life events happen, like say your partner is constantly nagging you. You said that when Bitcoin, because people show off when the thing's doing well, right? So, you said that when Bitcoin was at so-and-so value, you said we were going to buy the house in the country. You promised me we were going to buy it. And now the price has gone down so much and we can't even buy hardly anything with it. Are you going to sell now because we need to keep the rest of that money? Look, now you're into a bit of a loss even. We've lost all that profit. So you're going to sell it. And then they said, no. I'm holding on for the long term. Bitcoin's going to come back. It's going to do really well. And then what happens, of course, generally after a long bear market grind downwards, you then get the lurch towards the bottom that happens in Bitcoin almost every time. A massive lurch downwards after, say, a year or more of grinding downwards. And when that lurch happens, that's when the partner says to them, you better sell right now. If you don't sell right now, I'm getting the lawyer, we're getting divorced, right? And then they panic sell, and then that's the end of the investment. And of course, that always marks the bottom, and that's when people start buying again, and that's when it starts coming back again. But this is what I want people to understand, is that it's all very well saying, well, I'm just going to hold through all the crashes. Doesn't make any difference to me. That's all very well on paper, but in real life, stuff happens. You've got a mortgage to pay. You've got a partner who's nagging at you. You've got kids who want money to go off around the world. Or, there's a million reasons why people might be tempted to sell as the price is plummeting.
Yeah. I mean, that's absolutely right. So what you're talking about really is that you kind of need a stoic. You either need to be really stoic and just hold on through it.
Few people are, yeah.
Yeah. Whoever Satoshi Nakamoto is seems to be doing pretty well with that.
Unless they're dead.
Unless they've just forgotten the password or whatever it is.
Exactly. But so I suppose what I'm selling a sort of holistic vision, or it's worked for me anyway. All I'm doing in my book really is just evangelizing what's worked for me and people who have the similar kind of mindset to me, which is I prefer to trade the cycles because it's actually more profitable anyway to buy just as things are starting. It's a trend following strategy. So, as things are just starting to recover after the massive crash and as the bull market is just getting underway. The most recent bull market got underway in 2023, so that's when I started buying Bitcoin again, and the price was far, far lower than it is now. It was around about
$14,000.
It's about 30,000-ish when I started feeling, I think this is a proper bull market now. And, now we're up at about 110,000-ish. So, it's come a long way from there. And I like to buy early in the cycle and I like to sell late in the cycle. I told my followers some months ago that I was selling on a peak, which was quite close to the price we're currently at. The price then had a big correction shortly after I sold half of my a third to a half of my holding. And then the price it went down to about 75,000 and now it's recovered and it's back almost at an all-time high. I like to, with this sort of long-term discretionary trend following, you could call it, what I like to do is, as I say, buy early on, and then when I see signs that things are getting a bit frothy, I like to lighten up on my positions, a kind of reverse pyramiding, if you will. Instead of adding to my position as it goes up, I buy the whole lot at the bottom or near the bottom, and then when things start getting frothy, I sell some of it, and I do that deliberately, not so much for financial reasons, but for emotional reasons. Right? Because I know from all the years I've been doing this that managing your mental state and your emotional state is absolutely key for staying in the game longer term. You don't want to drive yourself crazy. So by selling about half of my position around about 110,000, what that allows me to do is just chill out with the rest of the position. So, I've already got a load of profit banked. So as the price then did its correction all the way down to 75,000, which is more than 25%, wasn't that about 30% drawdown? That would scare the hell out of me if I still had my whole position. But because I've only got half the position and the rest is nicely banked, that means that, I'm happy to ride the rest of the position and allow it to have a really kind of wide wriggle room. And now it's coming back up. The long-term trend is still intact since 2023, and I'm prepared to ride the rest of my position a fair bit higher. But if the bull market ends soon and doesn't go a fair bit higher, then I've still got my profit from the first half, so I'll still be happy.
So when it comes to, sorry, Tim, did you want to jump in?
I'm happy just to listen and eavesdrop.
Well, I want to know what Tim thinks of because he's been trading even longer than I have. So
I'm not. To be fair, I'm not a trader, so it's not something I can bring much value to the table with. So I'm happy just to listen, to be honest.
So
okay.
So I was going to say are you not then tempted, whilst you're looking at Bitcoin and all the other things, the breakout, as you and I know, because we look at charts, a chart is a chart is a chart. So, for example, I'm just looking at the chart of palladium and platinum and thinking, a few weeks ago, I was like, this looks like it's going to go. Silver's looked like it was going to go. It's just broken out. Gold has already broken out. There's lots of trading signals that are coming in other markets, are you not tempted to just go, okay, I've taken some out of Bitcoin, maybe I'll put some in gold? Or are you just focusing solely on that market? And I'm going to ask a follow-up question a bit later about altcoins, but temptations out of cryptocurrencies into other markets is the question, really.
Right. Yes, I do. Because I've been trading for all these years. I didn't just give up on everything else. So I've been trading stocks and futures all the way along for like more than 20 years. So,
okay.
So of late, yes, I've been making some money out of silver. I made a bit of money from platinum. And I made some money from gold, and then I sold gold again, but I should get back into that because I think I sold. I think my finger was a little too quick on that trigger. So, but yeah, I mean, the thesis that we are in a melt up, I think, is very convincing, and so I think these trades that I did in those metals. I think they need to go back on, really. I don't think I gave them enough wriggle room. I just wanted to take some profits for my own... I just felt like it. So this is the problem with not having anybody to report to, is that when you just feel like doing something, there's nobody to stop you. I haven't got any clients to go, what do you mean you sold out of gold? It's probably going to go higher. There's nobody telling me anything like that. So it's like if I want to take gold profits, I take gold profits. But frankly, I do expect these precious metals probably to go a lot higher. So yeah, I need to get back in.
So have you ever thought about setting up the Goodman fund and managing money for other people?
I've thought about it because lots of people have asked me over the years to do it. But I don't think it's for me, to be honest, because I hate answering to other people and I hate letting people down. And, I can't bear the thought of people writing me anxious emails going, but have we got a drawdown of 5%? What's going on? And me having to go, calm down. It's only 5%. It's probably not a big deal. This is normal. Your markets go up and down. I just...
Yeah.
It's not for me getting into all of that. I guess, Tim, you have to deal with lots of that kind of thing, do you? Or?
To an extent, but there's a great way of handling it, which is, I would say, we don't advertise conventionally. So the clients that reach us come because they're, for whatever reason, either word of mouth or because they've read some piece of commentary or maybe heard a podcast a bit like this. And because they're a self-selecting type of constituency, they haven't been aggressively sold anything. So what I'm saying is that I think they come into a relationship with us with their eyes open. Whereas, and I've written a bit about this lately. I think let's go back about. I'm sort of going a bit around the houses, but it's a set of insurance, and insurance is not bought, but it's sold. So in other words, people sort of they'll go, you know what, I really need to buy some insurance, but they'll actually respond to someone who's basically an insurance salesman saying, oh, we need, whether it's property insurance or whatever else. So there's a grudging acknowledgement by people that they need it, but they don't. It's not a huge, it's not a big emotional purchase. It's like a meh purchase. So they'll do it. And so if you can disconnect from, let's say, a high profile, a hype type way of saying, look, you need to own this. The more people self-engage, the more pressure falls away, because it's not like, nobody's aggressively gone out and said, you have to own this fund, you have to own this approach or whatever. And so it's much more like a journey of equals and a partnership with people. Whereas I suspect that 99.9% recurring of funds are aggressively sold. And the problem with that is that when they stop performing, people are that much quicker just to pull the plug and go somewhere else. Whereas if people are invested in something in a philosophical way, they're that much more patient with the process. That's my experience anyway.
Well, I like the sound of that. It sounds like you've got a nice balance there.
We've got some very loyal clients, and the other thing is it's the distinction between, let's say, retail money and institutional money. So a lot of fund money is actually institutional. In other words, it's bought by institutional managers and other wealth managers rather than Mrs. Miggins, let's say. That's not to disparage
I think
Mrs.
you're
Miggins.
wise. Well, no, you should disparage Mrs. Miggins because
No, but I'm not, because
Mrs. Miggins is annoying, man.
No, but Mrs. Miggins is also very, very loyal. So the key distinction between retail money and institutional money is retail money is stickier by far than institutional money. I'll give an example, and Paul may or may not confirm this through his own experience. But so one of the things that we own is trend following funds, systematic trend followers, or CTAs, managed futures.
Yeah.
CTAs in the States for commodity trading advisors. And I'm amazed that more investors don't use this vehicle as a sort of trend following price momentum approach. And I think the most extraordinary failure, if you like, is the institutional one, because the clients typically are institutional because they're effectively quasi hedge funds or literally hedge funds, which got me marketed to retail investors anyway. But my suspicion is that institutional investors who ought to know better get so spooked by the short-term volatility and drawdowns that strategy incurs that they get spooked out of holding them and then never go back. And institutional investors are the exact type of investors that ought to have the longest time frame, that have the time horizon and so on. So my point being that I think institutional investors in many respects are a lot more ignorant than private clients are.
It's interesting.
I don't know whether you'd
I
agree
think
with that,
another
Paul.
reason why it went out of fashion was managed futures went through a pretty dire period in the 2010s. I remember it just had
Well,
a
I think
run of several years that were a bit
they went in the
crap, so
wilderness
that
for a while.
put
But I
people
think
off,
one
I
of the reasons for that is because my understanding of a typical trend following fund is at any one time they're actually not invested. In other words, they're sitting with dry powder in the form of T-bills. So when the so-called carry went from 4%, 5% to zero, as bonds basically traded with zero yields and in some cases negative yields, it was a lousy implied carry rate for the non-invested portion, and as a result, and if typically 70% of the portfolio is never invested, then that's a huge has a huge impact on returns. But
Definitely, that's 100% right.
But the distinction now is that the bond market, and I don't want to go out on a limb, but the bond market rally, and this is, I think, the single biggest thing that we're living through as investors at the moment, and it's not widely recognized. The bond market rally ended 3 years ago. It ended basically during the first iteration of COVID and lockdown. So interest rates troughed at their lowest level ever 3 or 4 years ago. Interest rates are now going back up. A 40-plus year bull run in interest rates is over. And if you believe that interest rates go in fairly long cycles, and this is certainly something that Russell Napier, who's one of our favorite strategists, believes, his argument is that basically an interest rate cycle might last for 40 years. We are 3 or 4 years into a bear market cycle for bonds, for interest rates, and people haven't even appreciated that fact yet. So the idea that you can sort of make money effortlessly, or it makes sense to hold bonds as safe haven, or diversifies, I think is complete nonsense.
Well, we saw that fracturing, didn't we, recently, for the first time?
And bond markets throughout the world are cratering, and yields are rising across the world because most of the world is insolvent at a sort of governmental level, and that is the sort of the truth that dare not speak its name. So, most managers will say, well, because so much money has been made in bonds for the last 40 years, people are reluctant to abandon what's worked so well. But the bottom line is that market's over. That bull run is over. And if you haven't got the memo yet, you better get it soon, because at some point this thing is really going to become catastrophic, which is one reason why we're so keen on real assets and so unkeen on financial ones. Yeah,
no, I was also a bit of a fan of Russell Napier, and I think it was him who first put the idea into my head that, many years ago, that this bond bull market was not going to last forever, and it was starting to look like it was on its last legs. So thanks to him, I think, when it did start crashing in 2021, it had peaked. It peaked around about the beginning of 2020, I suppose, with COVID.
Yeah, so you had that massive monetary surge.
Yeah, so I didn't sell it straight away. I waited for a little bit of time to see if a bear market was beginning. But yeah, it didn't take too long before it was worth shorting bonds. The question now is, you say that you think we reached the peak back then. But again, going back to David Hunter, doesn't he think, if I'm not mistaken,
Yes, he does.
that prices of bonds are going to rocket once again, that interest rates are going to go down to zero once again, and then the bond market will be dead after that.
But I'd
based
say
on
why
based
take
on
the risk?
inflation. Yeah,
But I'd say why take the risk, because we know the direction of travel. It's going to be high inflation almost certainly. I mean, I put any money on that being the outcome. And all of a sudden, everything feels like a reprise of the 1970s. If you look at what worked and what didn't work in the 1970s, so the 1970s involved high inflation or stagflation, stickily high inflation and no real economic growth. That period was a disaster for stocks because, as Russell Napier would have said, and once inflation gets above about 4%, it's disastrous for pretty much every mainstream asset type. It's bad for stocks, it's bad for bonds, bad for property. The only stuff that worked in the 70s was commodities and gold.
Yeah.
And the price of gold and silver went up by something like 22 times during that decade. And this is something we haven't experienced realistically since then. No one in a dealing room environment or in a fund management environment has any real experience of dealing with a high inflationary or stagflationary environment. We'll get a load of what's happening now. I think we've reached the end of the cycle now. We're that much closer to the end point. And so the thing that we're most concerned about as a firm that manages, the partners' assets, private client assets, family assets, the works, we're all on the same journey together, is being caught on the wrong side of a monetary reset when, as in a market like, say, Argentina, you go to bed on a Friday and you have 100x in your account, and then mysteriously on Monday you wake up and find the government's redenominated that. So you might have had 100x and now you've got 50 new X, and 50 new X is worth a lot less than 100x was. And this happens in Latin America all the time. It happens in markets like Italy and the more sort of pig type economies, what used to be described as the pigs, the Portugal, Italy, Ireland, Greece, and whatever in the Eurozone. If you're on the wrong side of a reset when it happens, you could lose an awful lot of money without breaking a sweat, and that's the one that we don't want to see.
And there are two things that I'd pick up from there, which I think are absolutely fascinating about markets in general. One is that the environment to which people are indoctrinated, if you want to use that word, into the markets, they often think that is normal and that will continue. So the new generation that have come into the volatility of cryptocurrencies are expecting that to continue. If you've been born into a low inflationary environment, that's what you expect to continue. If you think stocks always go up, that's what you expect to continue. But we know that over the long term, things change. The market will always change, and it's just when people are most confident about it that those changes happen. And it's kind of difficult to explain, really, but you have to have kind of a long-term focus and to have seen it from many different angles, and to see it just constantly repeat over these cycles, to see it repeating in different things, as to how important that is. And the other thing is, going back to what you were saying about I give more credit to the general public than perhaps other people do. I think instinctively people know what's right and they do act. I know there's a lot of people who are there at the top making a lot of noise, but if you've read Gary Stevenson's book, you can see that there are only a few people in a dealing room who really know what's going on. And that's my experience. The traders, most of the traders are very good, and they have this instinct, which I've always thought Glen has got. And it's actually very fascinating to hear how much of your background has shaped, your ideas about taking positions, and the fact that you were trading a bit, and the fact that you were picking up on, what your boss was saying and all the interviews that you were doing on Morning Traders. And that kind of makes so much more sense as to where you've got that instinct from. But, generally speaking, I think people have, most people that I seem to speak to have a good understanding that something's not quite right. And, if you think that people in the city who are telling you on the news or working for the Bank of England or, top city economists presiding over where the economy is going to go, or Rachel Reeves or whatever, if you think they know what they're doing, then you'll be sadly mistaken. They haven't got a clue. I'm telling you, they have no idea. And if you want to prove that, go back to just before the financial crisis and have a look at what the Bank of England was predicting for the economy going forward, even during it. And I worked in the city with a top city economist who could not believe that interest rates were going to go down, couldn't see it coming, didn't see any of it, even when we were in the thick of it, just did not want to see it. And I'm not saying that any of these people are stupid, because they're not. They're very, very smart. It's just that they are. It's what Fred Harrison's talked about, the corruption of economics. Economics has never been taught properly in schools. You're not taught about the markets. You have to learn it from someone like Glen, reading his book, from experience, and also knowing that there's a lot more noise out there that's going to send you on the wrong path than stuff that's going to help you. And you have to kind of seek that out. It really is difficult. It really is why things are so hard. But
so I'll just add something to that, which is I think reading books about history, even if it's not financial history, but preferably financial history, is so important. The books that I've read on things like the Wall Street crash in 1929 and events even that happened in the 19th century and beyond have just taught me so much about different paradigms than our own, and that really, really matters when you're considering where financial conditions could go. Whenever, for example, I hear, and this is a very common refrain in trading books or financial books that have come out in recent years, of saying, it doesn't matter whether we're in a dip or a downturn or whatever, just buy some more stocks, just buy the dip, always buy the dip. There are a lot of very well-respected financial commentators. In fact, I'd say even the mainstream financial press tends to, a lot of the columnists tend to take that view that, and the only reason they say all that is because we've been, or at least America has been, in a very long bull market
100%.
Since 2009, and it has made sense to keep buying the dips. But as Taleb talked about in Fooled by Randomness, I seem to remember he told a tale about some guy in his office who was always showing off and making tons of money by basically doing the classic picking up nickels in front of the steamroller. In other words, he was doing complex financial transactions that meant he was making a lot of money, as from highly leveraged, of course, as long as the market continued to rise. And then, of course, the second that the 2008 crash happened, he loses everything, and then the trader is sacked, and then you never hear of them again. But then the next week, or as soon as the dust settles, they hire another person who's just as arrogant and then goes on to do the exact same thing a few years later.
Yeah, that's 100% right. You have to realize the market conditions, and whether if you're a real estate salesman and you're doing a great job, it might just be because the real estate market is doing really well. It might not be that you're a particularly good salesman, and you have to think about the what is actually going on in the economy that's contributing to your success. And like you say, it's like whenever there's a crash, when there was a crash before, I remember going on CNBC, sitting in the green room, and a very arrogant guy and his partner were there, and they thought I was an equities guy, and they were going, "Oh, okay, so what are you going to talk about?" I was like, "I'll just talk about the markets generally." And he's like, "Oh, we're bond guys, we got it bang on, we got it." And I was like, "You're so arrogant." Just because the market had come down, and I wasn't going on to talk about the market going up. I was going on to talk about it going down, because that's what had been happening. But it's just so funny that it's like that's what you get in the professional environment. In fact, that's what they look for in hiring. They look for people who are willing to take a lot of risks, and those risks seem to pay off in short spurts enough for them to continue to do it. But the banking regulations and how it should really work. I guess we could do a very long podcast on how to change it all, because it's definitely set up for disaster in the long term. It just cannot work the way it does. And you talk about 1929, 100 years ago, we're getting close to that kind of anniversary in a few years' time, and I just wonder.
It's so hard to make people understand this. I've had this when I've spoken at conferences in the real world, as well as when I'm just arguing with people on Twitter or whatever. But I get this so much pushback to the idea that things could go wrong. I don't want to be the permanent Cassandra, but at the same time, the reason why I am still in the business and still making money and still at home instead of having to go out to work and do a proper job is because I am careful, and I take notice of risks, small ones as well as major systemic ones. But the major systemic ones, you always have to keep one eye on. So the kind of pushback I get, and like I say at conferences, someone will put up their hand and they'll ask a question and they'll go, yeah, but, you're going on about worrying about a 50% market crash like we had in 2009. But, we're always told by the investment guru, not just the investment gurus, but the entire sort of established financial industry, that buying indexes and just holding them is the best thing to do, because even if the market falls 50%, like it did in 2009, within a few years it's come back to where it was, and you're on the road again.
But it depends. It depends on the specific timing you're talking about. So there are times when that just works really badly against you, and those times will invariably be when the market's at close to record levels.
Yes.
So 1929.
That's what I tell them.
So in 1929, the US market didn't recover its 29 peak until 1954. Well, that's 26 years, which is a lifetime for someone who's basically in the top of the market as a starter in 1929.
I tell them about 29, of course, but the example that I most like to use actually is Japan, because it's more recent and because it's even longer, I think, isn't it? Yes, it's even longer when I calculate.
Well, their market peaked in 89.
90. And then, and when did it come back to its previous peak? I think about 2 years ago, wasn't it?
Yeah, something like that.
I've forgotten it off the top of my head, which is bad because, like I say, I like to say it in conferences, but
the Japanese example is so interesting for so many reasons, and one of them is that it's actually worse than 29 for Japan, because the Japanese lost so much money between equity market values and property market values that they effectively had the equivalent of 2 Wall Street crashes back to back. So the extraordinary thing about the Japanese experience is that they had basically 2 1930s. And notwithstanding that, what was the outcome for Japanese culture and Japanese society? Nobody was rioting. You didn't see people just like smashing shops and looting. So the Japanese are stoic in a way that nobody else in the West can remotely compare to.
The outcome, and which is partly a result of demographics as well as the market crash, is despondency and stagnation. So yes, they're being stoic about it, but
it's this ongoing demoralization. But the most infamous thing, the most memorable thing that I think any fund manager's ever said to me was in relation to the Japanese experience. This is going back to about the year 2000, and the Japanese market hadn't even begun to recover. It's sort of 89 high by then. And he said, and he was the manager of a Japanese fund, and he said, Japan was the dress rehearsal, the rest of the world will be the main event.
I know, we've learned nothing. The world has learned nothing.
And the astonishing thing is that Japan was the first country to experience what the rest of the world is now experiencing, which is, it's over. The good times are over, and the Japanese just got there before everybody else.
Just looking at Japanese yields, last time we were talking about them, I think they were just over 1.1%, and they've just gone over 1.5%, which, I mean, it's huge moves in the 10-year.
They're in deep trouble because what have they got? 250% debt to GDP for the government, I think. They can't afford to have their bonds kind of...
Well, they don't, I mean, like much of the rest of the world, they don't have a functioning bond market anymore because the Bank of Japan owns nearly all of the JGBs in existence. So the
domestic population owns the rest as well.
And you've got a Potemkin market, so it's not a free market anymore. There's very little... I would be hard pressed to identify a single financial asset in the world that is being manipulated in some form by government action. Yeah, and this is a disaster in the making.
No, it absolutely is. I completely agree. And I've just looked up the Nikkei just to get the exact date. So, yeah, it's 35 years because it only reclaimed its previous high actually last year. And that's 35 years of decline. So when someone puts their hand up in the audience at a conference and says to me, we should just buy and hold because we can sit out the correction. It's like, what if the correction lasts longer than you're going to live? And that's not hypothetical.
It's even worse
real
than,
for all
it's
Japanese.
even worse than that because everyone's talking about basically survivorship bias. There are countries where the stock market closed and never reopened. Russia and China being among them in the last 100 years. So there are times when it just goes horribly wrong and never recovers.
And also, you've got to think about individual stocks. Remember that the index is made up of the strongest of those stocks, and some of them just come out of the index and then go to zero or underperform. So, yeah, to be fair, you did say buy the index and run the index, and it will represent the strongest of the stocks. But that's not necessarily how individuals trade. They will say, "Oh, well, it's in the FTSE 100. It's going to do well over the long term," and that's not necessarily true.
No, exactly. And this is the thing about passive. Are you familiar with Mike Green on the internet, the financial sort of guru? Not guru. What is he?
Going to look him up.
Yeah, look up Mike Green. Professor Plum, I think, is his Twitter name or X name. He's really, really good, and I highly recommend checking out his stuff because he knows his stuff. Anyway, his big bugbear has for years been the passive investing cult. Just the fact that it's been so encouraged to the point where, of course, passive is starting to eclipse active investing. And it's just a classic bubble as far as he's concerned because it feeds on itself. You end up with fewer and fewer people actually actively deciding what shares should be bought and go up and which ones should be sold and go down, and you end up with far larger percentage of the market just buying the whole lot, and so it becomes a self-fulfilling prophecy. The more passive is bought, the more the big names go up and up and up relentlessly. And then you end up with crazy valuations like we've seen for some of the tech stocks.
Absolutely. So when it comes to, I just wanted to think a bit about the most volatile of the most volatile, the most risky of the most risky, the altcoins. Are you swimming in those volatile waters? And you must be having a lot of fun because like a 25% move in a day is not uncommon in some of those coins, and it's just absolutely crazy.
It is, and I've had a lot of fun in the past for this particular cycle because Bitcoin has outperformed pretty much all the way along. My biggest trade by far has been in Bitcoin. And there have been times where it looks like other cryptos are going to outperform it, but then they generally don't. What happens is another crypto might have a small period of outperformance, but ultimately for the past 2 years or so, Bitcoin has been the only consistent performer. The rest of the crypto market, I think, is sort of out of fashion, almost entirely. There are some cryptos that look like they could have some really big breakouts shortly. And, I'm not disparaging those that have had multi-100% rises over the past couple of years. It's just that they tend to come in fits and starts. There haven't been many long, smooth rises among the cryptos, apart from Bitcoin itself. But I'll name a few names just for people listening, as they might be interested in what I'm looking at the moment. BNB is the code. Binance coin is one that is very close to all-time highs once again.
I like
rather like Bitcoin. Bitcoin is, as I say, sort of as we speak, within an inch of an all-time high. BNB has been threatening to break out in a big way for approximately a year now. It's one of those, you see, it was in the bear market with everything else, and then it just suddenly has a massive rise. It's more than doubled in price, and now has just been going sideways for about a year. And it's got that look about it. Experienced traders will know the look I mean. And I'm sure you two will know the look I mean.
I know the look you mean.
It's threatening to break out in another big way. A few others worth looking at. Tron, or TRX is the code, recently had an absolutely crazy high.
Blimey. Yeah.
And then it came down somewhat, but now it's working its way back up again. It's forming a sort of continuation pattern, as classical chartists would say. TRX is Tron, which was highly respected in the 2017 boom, but then kind of hasn't been talked about much ever since. So it's kind of it's quietly doing its own very impressive thing that not many people have noticed. So that's worth keeping an eye on. XMR. Now, this is a really interesting one. Monero.
Yeah.
Have you heard of Monero then?
Oh, definitely. Yeah. It's truly, the blockchain's not open, so you can't see the transaction. So isn't that the one that is truly private, supposed to?
Yeah, the blockchain is... I mean, it has a very complex system to try and cloak transactions. So it's not like the whole thing is hidden or anything, but
No.
it's kind of a system where, without going into too much technical detail, what they do is when you transfer some Monero from one person to another, it basically goes through a process that involves the kind of sort of confusing the trail, as it were. It's sort of like putting out a ton of breadcrumbs in all directions all at once.
Like a VPN, maybe?
Say that again?
Like a VPN, perhaps? It's like you just don't see the actual transaction.
Yeah, it's a similar kind of concept. The idea is just there's no point me going into detail on it. So it just cloaks transactions. So the point is that Bitcoin itself, contrary to what many people believe, is actually fairly traceable. Even though you can be pseudonymous when you have a Bitcoin wallet and you're trading Bitcoin, in other words, you don't need to use your actual real name in order to do it. But despite that, the fact is that if you have a Bitcoin wallet and you're buying and selling things with Bitcoin, or having Bitcoin transferred into it and then moving it somewhere else, or changing it into other cryptocurrencies, all of that stuff can be seen openly on the blockchain. And that means that clever analysis firms like Chainalysis, for example, who specialize in this kind of thing, and Ellipsis, they basically are used by law enforcement to sort of follow the breadcrumbs and find out what's going on. And sometimes, in fact, very often, it seems criminals give away little clues that allow law enforcement to follow the blockchain up to a certain point, look at the transactions, and then go, oh, look, that transaction's got a little thing in it that gives me a clue as to their real identity. And so they're able to track these people down very often. That is not the case with Monero, where it is really, really difficult to track people down. So actually, for that reason, because it's so frowned upon by authorities, it's actually quite hard to find exchanges that you can trade the thing upon, which is a shame because it's in a bull market. And it would be nice if more people could trade it, I guess. But as I say, it's frowned upon because it's truly, or not truly private. It's still not 100% certainty that they will never track somebody down who uses it, but it makes it much, much more difficult than with Bitcoin. And I know a fair bit about these things because I was an expert witness in a criminal court case some months ago where somebody was they were charged with drug offenses that involved transactions of Bitcoin. See what I mean?
Yeah.
And I had to analyze the transactions. I got their transaction history, and I had to analyze the whole lot and then give a sort of expert summation to the court and write a report and all this. It went on for many days. The whole case was weeks long. And so it was really interesting to see how this stuff can be done. And and always the kind of plausible deniability that tends to exist with these kinds of things, unless somebody is stupid enough to kind of give real solid clues as to what they're doing. You can always sort of plead innocence and go, oh, well, I was just, sending some Bitcoin to my mate, or I was just trying to do a bit of investing in Bitcoin to make a bit of money. And, it's all those kind of excuses.
Interesting. So I would ask you more questions about how you mine for altcoins, but it's all going to be in the book. So I think if people want to know about that, they can read it, right? So
yeah, I don't mine for them personally. I don't do the mining. I just do the trading, the buying and selling.
Yes, I use that phrase kind of incorrectly, because when I meant when I think of mining, I think of looking at lots of chart patterns and looking at which ones look interesting. But actually, of course, in that world, you can physically mine, like use your computer power. Sorry, that was my fault. But actually, that brings us on to another subject that's kind of which is one that's fairly predominant in the world of cryptocurrencies, and that's actually being paid very high rates of interest to hold your coins. The phrase has for some reason gone right out of my head, but you know what I mean, where that's staking, when you stake your coins.
Yes.
And some of the percentages are worrying, what I would regard as worryingly high. Is that any part of the fundamental factors that you look at when you're thinking about investing in a particular coin?
Not necessarily for a particular coin, but certainly that was one of the factors that led me to feel that the market was too frothy in 2021, which again is when I sort of told my followers, right, I'm selling. I think I did an announcement that I was selling half when we got almost to the sort of the peak of that cycle, 2021, because there were loads of signs and signals, but the fact that so many people in crypto were becoming sort of icons and were being worshipped by people, and then they were, very often the same people who came a cropper when everything started falling apart. Sam Bankman-Fried obviously being the most notable one, but there were others. Sam Bankman-Fried, of course, from FTX, was seen on stage, rubbing shoulders and shaking hands with the likes of Tony Blair and Bill Clinton, and he'd come out of nowhere and he was wearing those silly cargo shorts and he had the big hair, and it was like, well, this guy's so cool or whatever. And yeah, it was cool until it turned out that he was doing fraud in an absolutely massive way. But as I say, there were other people doing the same kinds of things, and what you found was that yields were going absolutely crazy for many of those coins. So when I see across the board yields going to stupid levels, then I do start getting very worried. When it's just sort of one-off cryptos here and there, it's often just a kind of a quirk where people just get too damn excited about one thing. Actually, there's a good example I'll just quickly tell you about. Smarter Web Company. I tweeted about them a few weeks ago.
Oh, yes. Brilliant. Glad you remembered that. Yeah.
All right, yeah. So Smarter Web Company is a British company, where it's just so ridiculous. This guy basically is running a small web design firm. And when I say small web design firm, I mean, I looked up the company on Companies House to look at the company's revenues and profits. I couldn't find revenues, but I found a balance sheet where the company's net assets were £50,000, I believe, in a recent year. So it's just sort of a one-man band. This guy has just been running this little web design firm with a few clients for more than a decade now, and he's a middle-aged guy. Anyway, he decides he's going to do a reverse takeover, or do a reverse takeover of a company that is listed on Aquis Exchange, and he basically sort of reverses Smarter Web Company into this old company that was no longer sort of properly operating, but had already passed all the regulatory checks. So this basically means that this guy can list when he wouldn't normally be allowed to list, his tiny little small business on even on a small exchange like Aquis, right? He wouldn't be able to do that. So that's why he goes this route. Anyway, reverses it into it, and what he does with the money that he raises is buy loads and loads of Bitcoin, right? And because this is a sort of unique Bitcoin vehicle in the UK that he's created, the share price went absolutely crazy. I'm going to find my tweet on it so I can give you some exact figures, but suffice to say, he has done an absolute blinder. The guy's called Andrew Webley, which is a name for
that's ironic.
Yeah, it's the smaller web company. And yeah, where's my tweet? I can't find my tweet on it. But basically, he had the company last time I looked. Should we look it up now? How much is it worth? I haven't looked it up in a few days. It was worth about £100 million or something last time I looked. Oh my Lord! It's taken off again.
Probably because of all the publicity. It's doing a GameStop.
Oh, wow. That is insane. We got to find out what the market cap is. Quickly Google it.
That's going to be a great short at one point.
Lord.
I mean, that's probably a good
Well, I
canary.
wanted to short it, but I couldn't short it because, it's a tiny company, or relatively small.
Is it still? It's not private. No, it's not. So if it's
but
on,
I couldn't borrow the shares to do it.
Yeah.
So I couldn't. Well, actually, it's lucky I didn't short it because it's gone up absolutely tons more. I was a little bit premature there in wanting to short it. It would seem. Where's the market cap? Sorry, I talk amongst yourselves.
No, it's an amazing story.
Here it is. £255 million is the current market cap. £255 million for a company which effectively, a matter of weeks ago, was worth, the guy had net assets of £50,000.
But what is this going to do?
How do you parlay that?
What this is going to do is encourage a lot of other companies to do exactly the same. Hello, .com boom, exactly what we've just, what we've lived through, what we saw happening back then. This is the beginning of the end, isn't it? It's the beginning of the end of, but that end bit can go on for a couple of more years, possibly, or 18 months or whatever. And it can be a big old party. I mean, the altcoin cycle or the Bitcoin cycle's regarded as 4 years, isn't it? And altcoins are supposed to cycle within that. And I don't really know what that cycle's supposed to be. I assume it's supposed to synchronize with it, but it hasn't done at the moment. But this is the sort of thing that could get people back into it and starting talking about the froth that we then gets your grandma or whoever it might be, or, the taxi driver talking about getting back into it that we're not seeing now. These are the early signs of people saying, oh, look how much money can be made, which is what happened at the early stages of the .com boom. Just by putting .com after your name, any company name, and floating it, you would have made a lot of money very quickly. That was the craziness of that time. And you're probably telling people at conferences all the time about how that happened. And now we're seeing history repeat. But of course it rhymes. And this is exactly the same thing.
What I quite like about this one, Glenn, is your little tweet. I'm just reading the last bit of it from whenever you put it out about this guy Webley. Just to put it all into perspective, last month in the company's retail investor IPO document, it boasts that Andrew Webley, founder of the Smarter Web company, has committed to invest a minimum of £30,000 through his ISA.
Yes, that's right.
Exactly. And as I wrote,
now that is comedy gold. That is comedy gold.
Exactly. That was April. They wrote that April, and we're only in June, and the company's worth £225 million. It's astonishing.
I mean, that is a mark of history.
No force on earth can prevent people who are determined to grow suddenly rich.
Oh, who said that, Tim?
I can't remember, but I should remember. It might be Lord Overston.
That's it, Lord Overston. And I heard that from you. Yeah. Brilliant. Oh, man.
I mean, so the thing about, the crazy thing about this, obviously, is because with this company being worth so much money now, you've got a crazy situation where it's basically a Bitcoin fund effectively now, because the web design business obviously is negligible. So all he did was list, raise some money through debt and equity, and use that money to just buy some Bitcoins and hold some Bitcoins. So it's a Bitcoin fund, but whilst I haven't checked in the past few days, last time I looked, the actual Bitcoins themselves could be sold. You know, if you were to sell those exact Bitcoins right now on the open market, you would have got several million pounds for them. It was under 10 last time I looked, under 10 million pounds. The company itself, though, is valued at 225 million pounds. So it's like, but that's pure insanity. There's no way that situation can last in the long term.
Oh man, that is, yeah, a marker for history. Absolutely.
But anyway, the reason why it's happening doesn't mean that we're at the very peak of the boom.
Not yet,
and
no.
It's kind of frothy and crazy. What it means is the regulators have messed up in the UK, as I've been pointing out for years, get very annoyed about, that they basically banned many legitimate ways, or what should be legitimate ways of investing in Bitcoin, and particularly banned it from ISAs. So they made it very, very difficult for people who've got their money in ISAs to find any kind of way of getting exposure to Bitcoin.
So, I mean, this has always been the problem with regulators. I mean, my favorite definition of regulators is these are people who wait until the battle's over and then waddle onto the battlefield and shoot the survivors.
That is a perfect description. I think you'll actually see, I did a follow-up tweet where I talked about the Bitcoin Cobra effect, where you know how this famous story about how in colonial India, the Brits
people were paid
Yes.
to supply cobras because they were so dangerous. People
cobras,
started
yeah.
breeding cobras.
Yes, exactly. So the Brits were worried about the number of venomous cobras in Delhi, so they offered a bounty for every dead cobra. And at first, people were bringing in the cobras they caught in the streets, and it's like, oh, well, this is working pretty well. But then people started breeding cobras just to kill them for the bounty. And so when the government then realized their mistake and scrapped the scheme, all the breeders released their worthless cobras onto the streets.
Oh my God.
As you do, and there's more cobras than ever. So that's, or we could call it the law of unintended consequences.
Exactly.
And that's what the regulators have done with Bitcoin. They've created unintended consequences, and Mr. Webley is the beneficiary.
Didn't Taleb talk about that with the Dead Sea Scrolls, that apparently there was a bounty for finding them, and you were paid by how much of, how many of these tablets that were found. I can't remember the exact details, but it was, if you found a tablet, the government paid you for it. And so what they would do is find a tablet, smash it into pieces, and then give it in bits because you get more as opposed to in whole. So it's like they're not really understanding human psychology. But Glenn, I can't believe it's been over nearly 2 hours. So it's been a really...
How did that happen?
I know. Absolutely incredible. It's been so much fun. I think we should probably go to media picks, unless there was anything that you specifically wanted to say that we didn't, or mention that we didn't kind of ask you about.
Just one little thing, like Columbo. Just one more thing.
Just one more thing.
I just want to draw your attention to a really fascinating article that I read yesterday, so it's sort of fresh in my mind at the moment. It's written by the Free Press, Barry Weiss's sort of new media giant, which has sort of heterodox ideas, it's trying to be different. But, Barry Weiss was a famous New York Times journalist, and she had a massive falling out with them over various woke things. And she left and she set up her own company, the Free Press, which has become pretty big since in the last few years. There's an article there by Ted Goyer. Ted Goyer has been around for many years as a jazz critic and music historian, but he's also a kind of polymath, and he's written a really interesting article about what he calls the collapse of the knowledge system, right? So it's all tied in with everything we've been talking about, the general degradation of Western society. We've been talking about it mainly from a financial point of view. He's talking about it now from an informational point of view. If you ever read Dominic Cummings's endless blogs that he puts online, they're pretty hard to get through because they're just so long and rambling. But the point he always makes is about bureaucratic sclerosis and the decline of the Western bureaucratic systems, and how basically governments find it almost impossible to get anything useful done now because the blob, as he calls it, sort of stops them. So that's another part of the sort of degradation of the Western system. Ted Goyer here is, as I say, bringing attention to the collapse of the knowledge system. And he points to a certain number of different factors here. Number one, scientific studies don't replicate very successfully anymore. And the whole foundation of science is, of course, based on trust that its claims can be replicated and validated. At the moment, 40% of published studies are failing to replicate. And even worse, as he says, the fake studies statistically get cited by other scientists more often than reliable studies do. Wow. So that's the first sort of leg of it. He says public distrust of experts has reached an intensity never seen before. I think we all know about that kind of thing. The career path for knowledge workers is breaking down. And you may have read in the press recently about the dire employment statistics for 18 to 24s. I think that's the case both in the UK and the US, as sort of early warning sign of what's happening there. Funding for science and technology research has been declining massively. Universities, particularly in America, have lost their prestige and have made enemies of their core constituencies. So now, of course, Donald Trump has declared outright war on Harvard and some of the other universities. The plagiarism scandals that went all the way up to Harvard's president. And finally, and this is a bit of more of a controversial take, AI, he thinks, is making everything worse because it's been imposed everywhere as the new expert system to replace the human experts who people no longer trust. Instead, we all must trust in AI. But unfortunately, even as its models improve, it carries on hallucinating and generating ridiculous responses. The authorities take this for granted and continue to tell us that it will be replacing all of our jobs in a very short space of time, even though it's still, as anybody who uses it will know, very often churns out incorrect information. And sometimes even when you challenge it on the incorrect information, it sticks to its guns and insists that it's correct. So, with all of that together, he's saying this is another sort of slow motion collapse that perhaps people are not thinking about enough.
Wow. That is something. That is something. Tim, did you want to add anything to that?
So con mum is one of the most it's a classic example of one of the life trumping art, and it's called Con Mum. It's quite current, so I think it came out earlier this year. And I always give the game away, so I'll try not to reveal too much about it. But it's basically a documentary about a Michelin level chef. He gets approached out of nowhere by someone saying, "I'm your mum," and they sort of hook up, and she claims all kinds of increasingly unrealistic sounding links to like
Saudi royalty, or is it? Yeah, she pretends that she's
Sultan, related to the Sultan of Brunei.
That's it.
And it's like, is she for real? Are they related? Is she a con agent or not? And it's without opining on any of these things, it's just an extraordinary documentary. And you think, how can this possibly be true? But by all accounts, it's completely true. Without giving any more away, it's called Con Mum. You can find it on Netflix, and it's just mind-boggling.
I can't believe it's only got 6.6. I think.
Yeah, I was just thinking that because
IMDb scores are notoriously unreliable, though. So,
but I don't know anyone who's seen it and gone.
I'd give it at least an 8.
Yes, for sure. for sure.
Maybe Con Mum has got all her friends to go on there and give it low ratings.
Well, indeed.
You
'Cause
gotta
But
watch
I read an
my-
article about this, so it's already spoilt for me because I'd read a whole interview with the guy, the chef.
Oh, really?
But I haven't seen the documentary yet.
Oh, you
Is
gotta
it
see
still
it.
worth watching?
Oh,
even
definitely.
If
definitely. I mean,
100%.
again, truth trumps art. But because it reminds me of another film Paul put me on to, which is remind me, Paul, which is the worst film ever made? It's Run for Your Wife.
Yeah, Run for Your
Wife, which is
Didn't that run in the West End for like
it
50
was
years or
originally a
something?
West End thing, and then it sort of metastasized into this film with Danny Dyer. And the best thing to say about it is that Danny Dyer isn't the worst thing about it.
Yeah, that's one of the reviews. It's
The
just so
sense
funny.
of just how extraordinary a cultural artifact we're talking about. But the point being, it touches on the IMDb rating system because basically, I forget what the overall rating is, but it's probably about 2.
Oh wow! I just looked it up. 2.6.
Yeah.
2.6, which
so
is
low.
pretty mind blowing. But basically, the bottom line is that it's even more of a barbell than that implies because the ratings will either be 0 or 10. So there'll be 0 for anyone that's seen the film, and there'll be 10 for anyone who's a member of the director's family or close relatives of the director. And so I've already overstayed the mark, but this is 2 for the price of 1. So Con Mum is the recommendation, but Run for Your Wife, if you get the chance to see it, comedy gold.
I mean, I find Run for Your Wife so bad that there's no redeeming.
It does.
factor.
It's like going into a black hole and then coming out the other side. So it's so bad it is sort of enjoyable.
Well, I couldn't get there with it. I couldn't find it in any way enjoyable. Unlike The Room, which I think is just so bad, it's so hilariously.
Yeah, that
brilliant.
one does circle back to being enjoyable, whereas Run for Your Wife maybe just stays the wrong side of enjoyable. But as someone I think points out in one of the better review, well, one of them, and all the reviews are hilarious. For anyone that's actually for people who've actually seen the film and then commenting about it, I think the best synopsis of a review is there's one scene when someone stands on a rake. Exclamation mark! Like the kind of thing that you'd see in a Tom and Jerry cartoon.
I'm just watching the trailer as we speak, and there's a classic bit where Neil Morrissey, who unfortunately
Lands on a
stars in it,
cake.
Yeah, he just wants to put it-
So there's
it's not
like an
a good film.
entire cake on a sofa for
And he sits on it, as I
and then
remember.
he
He just sits on
jumps.
it.
It's like he
Jumps on it.
jumps with his, when you go and jump with your bum onto a sofa.
Yeah, that's one of the more sophisticated gags in the film.
Yeah.
So you've ruined. That's a real spoiler for people who are looking for the sort of
I'm
comedy
sorry.
comedy
Why
depth.
would anybody leave an entire cake that looks like it's just been baked on a sofa, just like on its own? Why would you?
But some people live for that level of comedy.
But what about Snow White though? Still 1.8. I mean, I just cannot believe. I'm almost tempted to watch it just to see how bad it is, but 1.8 is just shocking. I mean, that is like incredible.
It can't really be a 1.8 film, can it?
I don't know. That's the thing. I can't bring myself to watch it.
Are you brave enough to take that risk?
I'd have to get some
Life's
wine.
too short, isn't it? Can't
Yeah,
be
I don't
bothered
know.
to sit through
It's like
all that just so I can work out if
what's
the
that
IMDb
Japanese fish that if it's not been prepared exquisitely, then basically you've got 30 seconds and then you'll die if you eat it. And it's like,
That's right.
well, I could eat it, but is it really worth the risk? Well, I
Yeah.
just shove it in the bin.
Yeah, it was like Gladiator 2. I was like, I'm gonna have to watch it, even though I think it's really awful. And there was some of the fight
True
scenes were
stuff.
very good, but other than that, it's just gone wrong, isn't it? It's just they've
Oh,
done.
I see they got the
Incident-
standing on the rake clip into the trailer as well.
Yeah, all the
best bits.
highlights are there. Incidentally, Paul, were you aware that they've done a sequel to This Is Spinal Tap?
No.
Yeah, it's coming out later this year, apparently.
Oh, fantastic! I can't wait.
But it can only disappoint.
Oh,
Yeah,
I
that's
don't.
why
I
I'm a
don't
bit
know.
worried about it.
Some things I would hope they just know they've got to get right. They've just.
Because there's a teaser trailer, and as you can probably imagine, the teaser trailer basically just consists of someone switching on some amps, and they go all the way to 11.
Oh no, it's just that's the easy option.
Yeah, yeah. 12 would have been better, but yeah.
Yeah, exactly. At least do a twist on it. For heaven's
Yeah,
sake.
these go to 12. Oh, blimey. Well, look,
What about your media pick? You haven't done one, have you?
Me, no. Well, I was just going to keep it simple and obviously go with your book. And genuinely,
Oh yes, my book. Sorry, I
yes,
forgot.
yeah, your book.
Here I am trying to talk myself out of.
Haven't you just released it? You've literally just released it, haven't you? Your second edition, right?
Yeah, it came out just 2 days ago.
Yeah,
It's
fantastic.
called This Is Spinal Tap.
Yeah, this is one. It's a really enjoyable read. It's like it introduces you.
What's it called?
The Crypto Trader, second edition.
Yeah, and actually,
Make sure you don't buy first edition by mistake because it's still for sale.
This goes all the way to 11 million.
It's actually really interesting that it's a book that you can apply to other markets, but you've done the right thing in calling it the Crypto Trader.
Exactly. As I mean, we're only talking about relatively small tweaks from the sort of the traditional methods that I've used for the stock market. And I mean, I tweak my methods for the stock market. I tweak them for slightly differently or for the futures markets. And then crypto came along. And again, it's still the same tried and tested methods that have got a ton of academic support underpinning them, and I do cite lots of academic references, lots of little footnotes in case people are interested in the book, just because there's just so much proof going back, testing back over many decades that these strategies work, and they've also been tested in recent years very thoroughly in the crypto market. So even though the crypto market in its sort of current form really has only existed for about a decade or so, because before that, in the early years of Bitcoin, sort of 2009 to 2012, 13, it was a very scrappy, illiquid market. But since then, it's been becoming much more liquid, and as a result, the same sort of chart patterns and the same trading strategies have been applicable to it as other markets. Though, as I say, it's actually been easier to trade than other markets because there've just been less sophisticated professionals messing up all our nice chart patterns.
Indeed. And so, was there anything that you wanted to give as your media pick? Is there something that's caught your eye?
Yeah. Sorry, just looking at. Oh yes, and I've got one more because you just mentioned the buying the book. I clicked onto my page, and it's now the number one most gifted in foreign exchange. Number one most gifted in the foreign exchange category. I don't know why it's in the foreign exchange category. Amazon chooses its own categories. It's also in the home and garden category and the calendars, diaries, and annuals category.
Ooh, well. Okay.
I'm going to have to write to them and complain.
That's AI, isn't it? They've got AI to sort that out.
It must be. And also, it's just ticked up to more than 1,000 reviews now. Not for the new edition. Like, those are sort of for the first and second editions combined. It's now got 1,001 reviews on Amazon. So that it turned to 1,000 on the day of the publishing. So I was very pleased about that. It was a nice little coincidence. Anyway, as to a media pick, I'm going to give you something really depressing. How about that?
Yeah. Go for it.
Does that tickle your fancy? It's you may have come across it before, or it may have been mentioned by one of your previous guests. I don't know, but there's a website called AI-2027.com. AI-20 the year 2027.com, right? And what this website is basically a sort of a story, and it's a story that's been written in collaboration by a whole bunch of the world's top AI experts. Plus, they dragged in Scott Alexander, him of the Star Codex thingy blog, famous American intellectual, Scott Alexander, which is a pseudonym. Anyway, the bunch of them got together and they wrote a whole thing about what the AI future will look like in the next few years, possibly, but not definitely, but possibly. And as you read through it, it feels utterly realistic and it feels utterly terrifying. And the outcomes are not entirely pleasant, but it just blew my mind when I read this. It's terrifying, and I just really hope that it doesn't come true, but it might. How about that?
Yeah, still probably better than Snow White, I would say. But yeah.
It's not just some stupid, like, some guys have put together a thing about AI goes rogue and takes over the world.
Yeah.
It's not, because it's written by the people who actually developed AI at the top level and know how it works. The whole thing comes across as utterly plausible from start to finish. That's what's so terrifying about it.
There was there's a YouTube channel. Have you heard of Slide Bean?
Slide Bean.
Yes,
No, I don't think so.
Yeah, check out Slide Bean YouTube channel. He did something on AI that was talking about its limits. I can't remember all the details, but it's a really good channel. The way he's presented financial information when he's on that topic is really good. I like the style of it. But he was talking about the limits of AI, and it was really interesting that there is this limit, and perhaps it will sort of undo what this AI 2027 thing is saying. But of course, it's all going to improve. But that's the thing about the future. It never works in the way that we expect. There's always a limit or something that it doesn't quite understand. And, so we shall see. But it's definitely, a very powerful thing.
Yeah, I've got a bit of optimism that AI is not going to destroy the world. And the reason I have that optimism is because despite this plausible looking story, whenever you read interviews with people who really, really know their stuff to do with AI, they seem still to be utterly split on whether or not these large language models are going to stop improving very soon, or whether they're just going to carry on until they're basically sentient.
They're not.
As I say, there are a huge number of really, really clued up AI experts and people who even have worked at OpenAI and companies like this who just think that it will reach a dead end pretty soon. So that gives me a bit of hope. I don't know whether to be hopeful about that or not, because on one hand, if AI does continue to improve massively, okay, it's an enormous risk for the future of the world, but it might be the only thing that could possibly raise the economy's productive potential and eat away at all the debt without us having to have a complete financial collapse in the 2030s, as David, what's his surname again?
David Deutsch.
No, the guy.
David Hunter. Dave Hunter. Yeah.
David Hunter. As David Hunter would have it, we're going to have this total financial collapse probably in the 2030s. So, if AI were to improve to such a degree, but still remain under human control, but was able to massively increase our productive potential, then obviously that could possibly grow our debt away. That's the only thing actually I can think of that could possibly grow our debt away. So on one hand, I kind of want AI to fail because it's so dangerous, but on the other hand, I feel like it might be the only thing that prevents total economic collapse. What do you think?
Well, I think that it is a tool, and as a tool, it will be very useful in certain specific areas. And I don't think it's going to take it. It will help people who know how to use it in the same way Google will help you, but it's nothing more than that. It's just following patterns. This whole idea of it being sentient, people don't really understand what they're talking about, and in terms of how it works. It cannot be sentient any more than your MacBook or whatever computer can suddenly be sentient. It can act intelligently, but acting intelligently and being intelligent are two very different things. So we don't even know what intelligence is. Nobody really understands the human brain. So how can we create something that mimics the human brain when we don't really understand it?
Well, what we do know, and you've probably seen some things in the news recently about this, like I have, that there are instances now of AIs, of these LLMs, the most developed ones, attempting to kind of lie to the users to try and... Did you see the thing about the one that was trying to stop itself being switched off, which is like our worst nightmare? The AI that decides it doesn't want to be switched off and starts lying to its users to try and manipulate them into not switching it off, that kind of thing.
But that's been programmed in, you see. That's not it doing that because it wants to. It's doing that because it's been told to, or it's been told that is something that it might want. so there's a bias towards it.
It hasn't necessarily been told that directly, though. It might have learnt that from all the information about the world that it sucks up. You know, it sort of imbibes opinions from left, right, and centre, and it seems to have kind of developed something of its own will based on just all the knowledge of the world that it uses to make decisions, you know.
But that's a bit like, you know, imagine that you've got an interpreter and somebody's speaking to you in Russian and someone's interpreting those words and telling you what that person is saying. You know, it's an interpretation. It's not intelligence. And that's all it is. It's just looking at patterns and following patterns. I'm not saying it's not useful, because it is hugely useful. It's very, very clever stuff, and it helps you do things. But the actual intelligence is to know, to think outside of its own parameters. In other words, if it were running...
Most humans don't do that, let's face it.
Well, if it was running outside, would it know that it started raining and that it needs to come in? Or would it know that? And how could it know that? And yes, you could create sensors, and we will have very realistic human-looking robots, and that is part of the future. But there are certain things it can do extremely well. But again, certain things it cannot do for toffee, you know?
I'm reminded of a quote from the 90s, which is, it used to be said that if you gave 1 million monkeys 1 million keyboards, eventually you'd end up with the complete works of Shakespeare. Now, thanks to the internet, we know this is not the case.
Yeah, and that's true. I think that's absolutely true, because you have to also think about probabilities and the probabilities of... But anyway, it's a fascinating subject, and no doubt it will. You know, I'm constantly telling people, get on ChatGPT, and I know lots of people who just won't even look at it. They're like,
they're crazy, because it's like, why would you not want to look at? I mean, look, I'm totally immersed in AI things. I use experimental image and video creation models all the time. I'm constantly experimenting with the stuff that the developers use, because I want to stay on top of this, and I want to stay, if not ahead of the curve, at least on the curve and not behind it, because this is one of the most important developments in the history of the world. It just seems crazy to sort of try and ignore it. One thing I was going to ask you before we go, actually, you had Grant Williams on very recent, or sort of, what was it, a couple of months ago, and I was going to listen to him today, but I had something urgent to do, so I didn't have time. I wondered, did he touch on AI, or because I know he sort of goes along with the general thesis of you know, our road to financial destruction and ruin, but did he feel that AI might have an impact on it either way?
I don't remember him having a view on AI, to be honest.
Yeah, I remember talking about it, and I think I remember saying something similar to what I've just said. And I think maybe we agreed on it, but I just can't remember. I'm sorry, I'd have to go back. But
where does he think we're ending up? I mean, does he still feel that we're like David Hunter, that we're sort of on track for a financial collapse in the next 10 years or so?
I think so.
Yeah, I believe so. I can't remember, if I'm completely
you have a lot of guests on. It's fair enough.
I just can't remember exactly what he said about that.
Did he have a view on Bitcoin, by the way, as well? I'm going to have to listen to this. In fact, actually, rather than listen to it, what I can do is download your transcript, put it into
that's what people do,
ChatGPT, and then ask it, does he say anything about AI, and does he say anything?
Well, this is what I was thinking about your Dominic Cummings. You know, you're saying that he rants and all that. You could just get ChatGPT to summarize it for you. And
I didn't think of that, actually. I mean, it's amazing, because I use ChatGPT all the time, but you're right. I never thought I'm going to do that. Thanks.
No worries. But yeah, I mean, the thing that keeps me sane in all of this is, A, I think there's some really good tools out there, but B, you know, there's nothing like meeting your friends and being with family and the human interaction that we all need. And in the end, I think that is what is the most important thing, you know, and that will come back. And I know people we've had so much technology over the years, so all our, you know, kids, everyone being involved in technology. The one thing that's human is that we hit saturation points and then just go, you know what, we're not going to do that anymore. We're going to start to do something that you just least expect. And that is, let's start listening to cassette tapes. Let's start listening to vinyl. Let's start meeting again. And let's do something like that AI can't really touch. So, I feel optimistic that maybe that's what will come out of the crash, that people will want to spend more time with their friends and family.
I think you could very well be right, because all the indications are that, obviously, all the statistics just show that social media in particular, but also many other aspects of modern tech, have been designed specifically to make us addicted and unhappy. And indeed, the figures show that they are making people, particularly young women, but people of all ages, seemingly less and less happy. And it is that lack of connection, the lack of real world connection. As somebody put it in in fact, it was that Ted Geyer, the guy whose article I mentioned earlier, in a different article of his, he mentions that he said you can even see the clues in the names about how everything is named now to do the opposite of what it actually now does. He says, for example, PayPal, it won't pay you and it's not your pal. And what was
good. Well, social media, it's unsocial, isn't it?
Yeah, exactly. It's like everything is named to do or more to the point, social media makes you less social.
Yes.
That's the point about it. Exactly. So it's like everything is sort of named to do an aspirational thing, but actually ends up making you retreat further into your little shell and not sort of interact with the world. And that, of course, is their aim, because that's how they make their money. That's why all the social media platforms now, pretty much all of them, penalize creators for putting links to articles or indeed to anything in their posts. So, you try and do a post, you put a link in it, and the algorithm automatically gives it very little reach. So creators learn generally not to put links because these people don't want you to leave their walled garden. And as a result, we all get stupider because we're all looking at posts now that have less information and less useful links than they used to. And that's all done absolutely intentionally by the masters.
Well, they're all trying to eat each other's lunch, aren't they? Because they're all becoming social media sites. So, LinkedIn, it wants to be social now. So it's all comments, where it used to kind of just be a directory. Same with all of them. They're all just trying to do, like Twitter doing videos. They're trying to be like YouTube. Then YouTube allowing, chats and being like Patreon. So you can, give the content creators money and all that stuff. So they're all looking at each other and trying to do the same thing. And so it is interesting. They kind of they're getting to a point where they can't grow anymore. So they've got to try and take other business off their competitors. So whereas before it was more delineated, Twitter was just what it was, short messaging, and Instagram was just taking photos. No, it's not like that now. They're all just becoming the same thing, I think, which is interesting.
Yeah, it's the continual process of what the writer Cory Doctorow calls enshittification of everything.
I didn't know there was a technical term for it.
There is Cory Doctorow is a tech journalist / author. He writes science fiction as well, and he. I think his dad was famous, Doctorow. What was his dad's name? I can't remember. But anyway, he's great. And actually, there's a great article he wrote for the FT, I think a couple of years ago, on enshittification. If you Google it, you'll probably find it. But it's worth reading because it just describes the various stages that all the tech platforms go through on their way from, they start off as nice guys, like Google, don't be evil was their motto famously. And, they all start off as nice guys, and then they gradually, slowly but surely, turn their systems, they make their systems more and more selfish in order to monetize them more and more, and eventually they're not doing anything. I mean, we've got to the stage where they're not really doing anything for their users. They're actually making their users' lives worse instead of better, because that's the way that they found to drag in the most coins from them, basically.
Yeah, absolutely. Doom scrolling. I think that's a telling phrase, isn't it, about what people are doing these days?
It is, absolutely.
Yeah.
And the last thing I would say just before we go on that is, when it comes to, no, I've forgotten what it was I was going to say. Well, I had such a great point to make before. I was like, before we go, I'm going to make a great point that's going to change everyone's lives.
Well,
and now I've forgotten what it is.
Well, you're gonna have to wait. I'll edit it. Don't worry. It looks seamless.
Yeah, sure. Okay. Yeah, at some point I'll just phone you back and just say it. You can record it on your phone. And there you go.
Well, you know what I can do?
What?
I can get your voice and make you say it anyway. You know? Did you know you could do that?
Yes.
Yeah.
Yes. Right. That is pretty terrifying. And yeah, I've seen it. I've seen it in action.
Well,
and I've made it do various family members' voices, and it is scary. And actually, there you go. All right, I forgot the other really important point I was going to make, but here's another really important point to replace it before we go, which is with this particular advent of now, have you seen, for example, videos of Donald Trump that are indistinguishable from the real thing? I don't know about you, but I've seen a lot of financial adverts now coming up on YouTube in particular, but also all the other platforms, Facebook and so on, where, you know, they've been doing this thing for years, scammers have, where they pretend, where they go, Martin Lewis says on this morning that he pushes this particular, he says you should buy, you know, these shares or whatever, you know, that kind of scam, right?
Yeah.
And then you click on it and you get scammed. Well, now it's got to the point, I saw ones the other day where they have actual video of the real people speaking, because it's indistinguishable now, the AI versions from the real people. So what they had was Good Morning Britain. They had Richard Madeley and Susanna Reid, and they were talking to the audience and introducing, they were going, oh, we're very glad to introduce our guest who's going to tell us about this amazing way that you can make money. Here's Emily Maitlis. Wow. And then they have what looks like the actual Emily Maitlis in the studio talking in her voice and telling you about how you should invest in blah, blah, and it will change your life. These kinds of scams are proliferating everywhere. And in case you hadn't noticed, because I certainly have, there are no attempts by this government or any other to bring in some kind of watermarking system for video so that we can tell real video from AI video. What's next? We see a video go viral of Vladimir Putin launching nuclear missiles, and then the US government doesn't know whether it's a real video or not. I mean, you know, that's round the corner. We need watermarking of some kind, and we need it right now.
Every single printer had a watermarking feature so that you couldn't use it to print money. And it would give the details of the printer, the serial number, the date and time that it was being used. And until I think it was some Scandinavian police department or whatever investigation caught some people using a printer and then kind of revealed how they did it. But it was this secret thing that only the insiders knew, which I thought was absolutely fascinating. Every single printer had this kind of invisible print. It was in yellow that you can't see unless you look really, really carefully. But it was done for that reason. And it brings us back to this, because yes, it's absolutely, utterly frightening that there's this other aspect of this that we have talked about on the pod before, but it bears repeating, that the telephone system used to be a very secure system. There are so many companies now, and it is relatively cheap to actually get connected to the telephone network, which means that somebody could take your voice and then ring a member of your family with AI, pretending to be you, or your son could be ringing you saying, oh, you know, I've been held hostage and you've got to send X Bitcoin to this person and blah, blah, blah.
And it was happened to some people already, I think.
No, it's definitely happened. Or the scam that lady got taken in by, she thought she was talking to Brad Pitt and he was going through his divorce and he needed money because he was in an accident and it was all AI. I mean, that is hard to beat. I mean, like stupid emails that say, send your money to an African prince or whatever to get his money out of the country. Yeah, we can spot those a mile off. But things that actually do sound exactly like you, that is very hard to deal with.
Well, I mean, now the technology, as I say, is now here with video as well. So you could just get a FaceTime from who you think is your dad.
Yeah.
And it looks like your dad and it sounds like your dad.
And it's coming through on the number.
I've broken down at the side of the road. I need £300 for a pickup truck. Or, it could be something as minor as that. But,
exactly.
Who's going to refuse something like that? You'd have to start asking them all kinds of personal questions to sort of prove it's them. But people aren't really prepared for the fact that that technology is now live and in the hands of pretty much anybody. It's, as I say, it's like governments, they're always so many steps behind the curve. It's so worrying. The AI firms don't give a crap seemingly about anything apart from making money. So as far as I know, they're not working on any kind of watermarking or sort of telling the truth from the fakes. The governments have got other things to worry about and just don't think about it at all. So one way or another, there's nobody steering this ship. And that's what I find the scariest, really.
Absolutely. Now, remind us, where can we find you? You've still got your Facebook site up, haven't you?
I haven't. You know what? I haven't, because it's Facebook and it's such a sludge fest these days. I haven't attended to my page for quite a while. Again, that's one of the benefits of being a one-man band is I just do what the hell I want. I'm not sort of beholden to anybody, but I've determined that I'm gonna roll it up again. So I'm gonna get that Facebook going. But where I really interact with people, even though I've got a tiny number of followers, is Twitter, because that's where I've got a little community of people who read the first edition of my book, and we all have nice chats, and I give them nice tweets. So follow me at Glen Goodman if you're on Twitter. Also, my website glengoodman.com. There's a little box at the bottom where you can sign up to subscribe to emails that I almost never send. But when I do send them, they've got something important in them, like there's a new edition of my book, or I'll be speaking at a conference. And actually, I'm intending to make more use of that as well. I'll start hopefully giving people useful crypto updates if the market starts taking off in a bigger way, like it looks like it may well do. And so that's Twitter. That's my website. Is there anything else I forgot? I don't know. I'm not very good at this self-promotion stuff. What, as you can tell, is there anything else I should be saying?
No, just where people can find you. So we'll put the Twitter handle first, and then obviously just a reminder about your book, and we'll definitely have you back on because it's just too much fun. Thanks so much for coming on.
Next time we come on, I'll just send my AI agent to do the job for me.
That's right. Yeah.
I'll program it with everything I've ever read or learnt or said, and then it could just do the job for me. No problem. I could do like 50 podcasts at the same time.
My goodness. Just thinking about that, I wonder if that will ever be. Yeah, I guess it's possible. I mean, it's not impossible. And there was a time when it was impossible. And now, yeah, that could be done. You could really clone yourself. But anyway, we want the real thing. So, or have you been a clone? Have we been conned? It could be.
The entire time. Yeah, you're going to have to do your podcast recordings in the flesh with people in the future. As you say, it's all going to become anything that's kind of human and touchy-feely is going to become a kind of luxury good in the future, isn't it? That people pay a premium for. And actually, that's just the last thing I'll say. I know you keep trying to wrap up. Definitely the last thing I'm going to say is I'm already sort of pivoting in that way. I used to try, despite my sort of extrovert personality, I would sit in my house and I would just churn out kind of useful trading information, which I believed people should try and follow robotically. But in recent years, of course, I realized that the emotional and mental elements of trading are far, far more important than I used to give them credit for. So I concentrate more on those kinds of things. But also just from a kind of trying to help people point of view, I've noticed that already Twitter is full of AI accounts, financial influencer accounts, pretending to be real human beings. And a lot of people are taken in, but they're just churning out AI generic trading advice, which is good advice, but it's just kind of generic. And that's all well and good. But what humans like me can help people with is the real struggles of actual human trading, which we go through, and AI has no real empathy. It might try and pretend it has sometimes, but it doesn't really empathize because it doesn't have the same struggles we have. So that's where the likes of us can still be useful in this world.
Well, definitely. To be fair, I did see that a while back and said that this AI will push us into having to meet people in person. And it is, again, absolutely the opposite of, like you say, with social media and PayPal and all that stuff. It is so strange how it almost works in inverse. But yeah, definitely. And so will you ever like do a conference yourself, like set one up just to, for your followers, or, in some, get some conference center and fill it out and just meet a load of people?
I should do at some point. I would like to meet more of the people who I chat with so much online.
Because I've thought about doing that, and I think maybe we should do something like that soon, because it would just be so nice just to get everyone and meet everybody, just to, hear other people's stories as well.
That's a very nice idea. I like that.
Yeah. Yeah.
Real people, real stories.
Yeah, you heard it here first. Fantastic. Glenn, thank you so much for coming on the show, and look forward to seeing you in person. I've never actually met you in person either. That's
true. We never have met. We often talk about, let's go for a drink, and then we don't go for a drink. But this is typical me, just stuck in this one room. I need to persuade myself to make more arrangements. This is actually the one problem, as I say, with working from home all these years, is that sometimes even as I say, I'm a chatty person, as you can tell, but even a chatty person like me can sometimes just forget. You just start forgetting to engage in any way other than digital.
Yes. Absolutely.
I need to feel Paul's face and stroke of Tim's hair.
Now, if you do remember what that one point is, because it's like, I want to know. I've got to know, and everyone who's listening to this will want to know what it is. So when you remember it, please email it to me, and I'll just like add it to the end of the pod.
Okay, I know I said it was world-changing information, but it may not have been.
It may not have been. Okay, fair enough. But I still want to know if you do happen to remember. Brilliant. Well, thank you once again, and hope to see you soon.
And thank you. See you soon.
Thanks, Glenn.
Thanks, Tim.
Cheers. Bye now.
Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.